Shall we start, Amit? Thank you. Well, happy morning. Good to have everyone here. Nice, bright Wednesday morning in Kuwait. And it's a pleasure to actually be amongst friends, many of you clients, partners, and more importantly, relationships that we much enjoy having had over many, many years. For those of you who wouldn't know me, my name is Ram. I am a senior partner with Cedar, IBS Intelligence. Just a quick introduction about Cedar for the people who probably are here for the first time. Cedar is a global US-based Forbes-ranked management consulting firm. We actually have had the privilege of working with many clients in Kuwait. Many of you are here today. Many of you who will be on the panel today. So it's a pleasure to actually be amongst a very rich clientele. More importantly, this event is being hosted by IBS Intelligence, which is the global fintech research and advisory arm of Cedar. It's a UK-based entity. And many of you, as on everything that's happening around banking technology and fintech. So my colleague Amit Jain, who's here, senior partner of IBS Intelligence, he and his team have had every single supplier, every single player who's operating in the banking technology world would actually be either researched about or ranked or profiled or engaged with by the IBS team, which goes back to say how deep and important this space is, and that brings us to the forum today. What we are going to do today is a topic that we've actually been doing a fair bit of engagement discussions around the world. In fact, this is the second event for the year. We started with Riyadh. Next month we will be in London at the Shard, where we will be having a very similar summit. The point is that building a future-ready bank is a topic that has actually been so resonating, independent of which part of the world you are in. I mean, our events are in GCC, in UK, in India, in Singapore. I mean, it's everywhere. But what is fascinating for us is that the conversation, the topics, the relevance of what we're talking about is so universal. I mean, it's not that what we're talking about something which is very different. Of course, there will be regional regulations and regional context. But the underlying theme that we'll be talking today, be it about what's happening on AI, what's happening on digital, what is happening on transaction banking, what's happening on payments, what's happening on the underlying technology, but also more importantly, what does it all mean for the customer? What does it all mean for banking as an industry? What does it all mean for the ways of doing banking in the future? I think a lot of that we would be covering. There will be a very extensive discussion today. And it's also a pleasure for me to actually be having a number of panelists today. We actually have, as you would have seen on the brochure that is left on your desk, we have speakers from multiple banks. We have speakers from Rubyan, from Urban Bank, from Gulf Bank, from KIB, from KNet, from Markaz, from Awarid, and a number of other banks here. I also like to take a moment to thank the sponsors of the event today, AQN, Finonix, BML Istisarat, ITS, TCS Banks, and Yeti. So I just thought I'll give that brief introduction. There are some very important norms for the day, as we would all know. Let's keep our mobiles on silent, but make sure that we actually are talking, which means we do engage a lot with the panelists. The idea here is not to actually be pontificating. The idea here is to actually be exchanging thoughts, exchanging ideas, learning from each other, sharing points of view. Well, this is actually a forum where and we're doing this, as I said, we've done this in Kuwait in the past, and every time we come there, it's always a pleasure to actually be having very different views on what happened before and what is likely to happen in the future. So that's the theme. Well, the future is arriving, and the future is arriving fast. And how ready are we to embrace the future? Well, that's pretty much the theme for the day today. With that, I would quickly jump into a small presentation. If I can have the deck on the screen, please. Well, there was an ask from many of our clients to say that, Ram, we get into these conversations, but can we actually have a perspective on what's happening in terms of the global and regional banking world, right? And we said, look, I mean, if I have to take a view from what's happening globally and what's happening regionally, ultimately we are bankers. Most of us are bankers or service providers to banks. So let's take a view on what's happening from a global banking overview and some industry trends, right? So that's the perspective. So let me, am I audible?
Yes, sir.
Yeah. So let's get into this interesting discussion here. Can you help me here? Or maybe you can move to the first page and then come and help me here. So we'll talk about three things today. We'll first talk about what's happening from a global context, and then we'll talk about what's happening in the regional context. And then there was also a conversation that we wanted to have about what does a bank of a future look like. So the conversation is, go back please. The conversation is about what does the future of, yeah, go next page. Thank you. So we talk about what a bank of the future looks like, and let's get some perspectives here. So I'm talking about global banking, and what you're seeing here on the screen is actually a perspective of how global markets have actually been comparing with each other, and there are some very interesting perspectives there. As you can see, if I invite you to look at row number 3, which is actually talking about banking assets to GDP, you find it's very fascinating that you have ratios all the way from 0.8 going all the way to 3.4, right? Kuwait is at 2.2, UAE is at 2.18, almost same. But what it tells us is that even as the GDP grows, the banking assets are actually at 2.5, almost 2.2 times of what the GDP is. That's a very interesting perspective for us as bankers to take away there. If I look at the SME to GDP contribution, that's a very critical factor. Again, you see that we are operating at 22 in Kuwait, but many of the markets have a much larger number. And it goes back to the profile of the country that we are talking about. The 2 or 3 very important takeaways for us is, one is digital penetration. You find that there are different degrees of digital penetration, and we are talking about almost 3 million internet banking users expected in 2029. And the fintech industry today is about $15 billion in Kuwait, with about 90 plus fintech players, and obviously the market is about what they're dealing with. And we all know there are 2 digital banks now, and we know digital banks in Kuwait. And obviously the very interesting part is the digital payment growth is operating at roughly at 16%. I have some colleagues of friends of ours from Kenya here who would be fascinated to see how those numbers, the payment numbers, are actually growing. About 16% digital payments growing year on year, right? Now, if I take this forward to say, let me just take the top 5 or 6 banks in the world, and let's look at how they compare with each other. That gives us a trend, that gives us a perspective on what we are seeing in the industry. Now, the important aspect is that the assets of the last top 5, 6 banks are growing at 5% and northwards. Now, that tells us a lot, right? Now, the GDP of the world may not be growing at that rate, but you find that the banking assets are growing at 5% plus, at least the large banks. That gives you, and again, I need to take you back to the 2.2 asset to GDP ratio. That tells you, gives you a perspective of how banking is moving faster than the economy, right? Which is also reflective of the let's say, the credit demand that exists in most markets, which are now getting addressed by what we are seeing as banks getting forward. If you also look at the gross NPL, that number is, around the world, it's operating at about 0.6. The average is about 0.6, less than 1 for most banks. But the key takeaway here is that capital adequacy, and we are all very sensitive to what happens on capital adequacy, the global average is operating at 17, and we are exactly at that number at Kuwait, which is 17.6. And you also see that the loan to deposit ratio, which is loan number 7, it operates anywhere between 50 to 100, which means that for every $100 deposits, we have what's the lending we do, which is the rest of it goes into investments and other assets, right? So it gives you a perspective on what we see there. But those are financial metrics. I think what matters more and what is more relevant to today's conversation is how do the operating metrics actually stack up, right? Some very interesting takeaways there. The first is that you see that ROAs are, banks' ROAs are operating in the range of 1 to 1.5, and that's the industry average. But ROEs, the return on equity, operate at very different scale. I mean, you have banks operating at 9%, and you have banks operating at 17%, JP Morgan at 17%, global average about 11%. We also included NBK as a last column there, just to give a perspective reflective of Kuwait. I mean, we'll talk about other banks in Kuwait as well in a minute. But the two very critical takeaways on this page is what you see as cost to income ratio and what you see as the staff cost as a percentage of OPEX. I think that's a very important aspect for us to recognize here. The global average cost to income operates at 45. But what is important is the staff cost as a percentage of OPEX. That's operating at about 58. You can see row number 15 there. And row number 15, you can see that 58 number there. And the important is that number has actually been going down every year, which is reflective of what digital banking has actually done to cost of operations, right? So that's a very important aspect. Of course, you see there are various other numbers on what the asset per employee is, what the loans per employee is almost half of that, which is going back to the loan to deposit ratio. You see deposits per employee, and you also see the net profit there. So those are some very important takeaways on what global comparisons are, right? Now let's move to some trends that we are seeing globally. These are global trends, right? So if you were to ask this question to someone in UK, or ask this question to somebody in Singapore, or ask this question to somebody in Kuwait, chances are that 90% of what everyone would say would be consistent. And that's the point I was highlighting earlier, that the trends and what we're seeing as future of banking is resonating as a theme everywhere. And what are those themes? Open banking, which means that we are now talking about marketplace partnerships. We are now talking about, banking not just done through the branch, not just done as a bank, but done through extended arms of partnerships. Digitization and automation, which obviously is not just about cost reduction, but also about driving a lot more digitization. And along with digitization, what comes along is the risk of how we actually manage, what goes into it. The classic challenges of AML and KYC. Now, many of you would be familiar with operational resilience. What Europe and UK is actually pushing very hard now, which is you are not just responsible and accountable for your own operational resilience as a bank, but you're accountable for everything that all your extended partners, including your technology suppliers, are supposed to be doing or not doing, right? So the accountability, as regulated entities is only going up. The cost of what they say as the cost of compliance is likely to be only going up, right? We do see a large number of neobanks growing year on year. We at IBS Intelligence, Amit and his team, we actually have a number of programs that actually review, recognize, and reward innovation that happens in new challenger banks. And what we consistently have been seeing in the last 4 years is the number of innovations, the number of types of innovation that actually we are seeing from banks around the world is only on the rise. So banks are going not only broader in their context, but also deeper, more and more about less and less, as they say. That's what we're seeing there. Tokenized payments, I think we do see 1 in every 4 cross-border payments is actually being tokenized. I mean, that's, you can see that's the kind of numbers we're moving towards. Ecosystem banking, which again goes back to the open banking context, which means there are larger number of products, larger number of services, more than what you and I have been used to. And it would be unfair if I move on without talking about sustainability and green banking. That is again a theme that has found global resonance, right? So these are some interesting themes that we are seeing there from a global banking standpoint. Let's get into Kuwait, right? What are we seeing in Kuwait and what is the observations we have from the Kuwaiti market? To start with, we actually had our GDP has come back to the numbers that it was. You can see the numbers compared there between 2014 and 24. And the GDP has, in fact, when this vote was put together, I was challenging the team, and is it flat? Well, actually, it went down during COVID, and it's obviously going up. So we actually have a bit of a correction that's happening there. But obviously, our population has grown, which means our GDP per capita has come down. I think it's a very important, perspective that we should carry as we move forward. And the GDP per sector, we know that 50% of it is oil and gas, and a number of other services sitting there. But what we have to be cognizant of is that the digital payment growth that we're talking about here is actually at a 17%, a staggering 17% growth, as we can experience ourselves every day and what we're seeing in the marketplace. We are, end of the day, talking about, this is a summit where we will talk extensively about fintech, and we do see a very large number of fintechs operating, and you can see they are operating across a number of areas. And some very interesting names that you see there. Now, 2 critical takeaways. The first, Kuwait has introduced a regulatory sandbox environment, right? I mean, this is an important, very, very important platform, a very important initiative that actually goes a very long way in promoting what would be a thriving, vibrant ecosystem. And we also see that there is a lot of fintech venture initiatives that are actually being co-initiated between the government and financial institutions, which is offering a lot of seed capital, which is also reflective of the commitment that we're seeing in the government here. While we're talking about fintech capital, I do want to also mention that Cedar actually has its own fintech fund, Cedar IBSI Capital, as you can see the board there. It's actually and we actually are committing to this space, and that's reflective also of what we are seeing, experiencing, and constantly evaluating what's happening in this world. So a lot of the research, a lot of what we are talking about today is not just coming from the experience that we carry from our projects as a consulting firm. It also comes a lot from the research that is being done and carried out by IBSI, and more importantly, what we're hearing on the ground from the fintech standpoint as we keep evaluating the investments we make here. Now, quickly on the banking overview, did you know that Kuwait has the distinction, has the unique distinction, and probably one of the very few countries in the world whose Islamic assets is more than the conventional assets. The Islamic assets of Kuwait banking market is at 195 USD billion, and conventional is only 88, a total of 383. That's a very important reflection of what we are seeing in the industry. We do see a lot of consolidation also happening in the market. We'll talk about that. But if I look at the banking assets, you can see that banking assets have grown at 5.75 in the last 10 years. Remember, I mentioned that the GDP has been flat, but you can see the banking assets have grown at 5.5, again reflecting the growth in the banking sector, which is reflected also in the deposits, almost the same in operating income. Operating expenses have not grown the same rate, which is good, which is why the profits have grown faster, which is a very true reflection of also building efficiencies in the market as we've seen there. If I quickly compare some of the key banks, this is obviously not exhaustive, and this is not, its idea is not to have all the banks, but if we just pick the top 5 or 6 banks, we find that the asset growth has been consistent. It's actually growing at an average of 8%. We see our gross NPLs are operating at 2. Global numbers are less than 1, just to give a context. Our loan to deposit ratio here is about 102. Our capital adequacy is in line with the industry, which is 18. And we also have a very, very important takeaway here, which is there are fee income as an industry, as across banks, is operating in just about 15% average. The last row you see there, fee income as a percentage of operating income is about 15%. That's very low. That's much lower than what you would see in many other markets. Again, that is a reflection of what opportunities and headspace we actually have as banks. I take you to the operating metrics. We are operating at roughly about 45% cost to income across the banks. Our staff cost is roughly about 58 percentage of the OPEX. And we can also see that we are having very similar ROAs to what the global averages are. Again, it reflects areas where we are akin to the global numbers and what we are also assuming as Kuwait. What would be the 5 or 6 key trends that we observe in the Kuwait market? Of course, a lot of these will get debated as we go through the day with panel discussions, but the top 5 or 6 themes, we find that there is a very, very interesting takeaway on Islamic banking. We spoke about that. Digital payments, I already mentioned that. We see a lot of focus on digital transformation. I would be very surprised if there was even one person in the room here who would actually not be involved in a digital transformation initiative in some shape or the other, right? This is true for us. Each one of us have been going through this journey, and there's reflective of what we're seeing there. We do see a lot of M&A, and even as we speak, there are conversations in the market which you're all aware of. So this has gained momentum. That's a very important aspect. We do see that there is a high degree of regulatory support that is coming up, and we also see a fair degree of ESG commitment, both from the regulator and from the government. Yeah. Lastly, I don't want to jump into the last page on what a bank of the future would look like. If somebody was to ask me what will a bank of the future look like, any guesses what is going to come in the next page? Want to visualize what the bank of the future will look like? Well, I'm not going to keep you a suspense. It's a very simple comparison, right? A bank of the future will have a few attributes to it which are very different from what we have today. First, you would not have a siloed organization. You will find a very high degree of collaboration in a single purpose team. We all face this every day. It would be very hard for us to have a departmental structure that are Chinese walled. You will actually find a high degree of collaboration, and that's a need of the day. We move from projects into what could be customer centricity. Now, this could actually be sounding very cliche, but the reality is that if we aren't looking at the customer, then the customer is not going to look at you. So we have to obviously be looking to drive this more from a customer orientation. Most initiatives that we are running, moving from an idea to code, what we have as long cycles of implementations, are moving very quickly into fast iterative approaches, quicker regulatory approvals. We have people in the room here who actually are starting this morning saying, look, we have a context where a bank has to comply with the regulation and have a system ready in 4 months. And I have to have the first MVP done in 4 months. That's the reality, right? So we are dealing with that context. We will be moving into a very high degree of automation. Today's conversation, we do have chat around AI and how that's actually also driving a lot of what we talk about. We will be talking about a high degree of business technology alignment. But the last and most important point is, because we are now moving into a collaborative mode, because we are moving into digital ecosystems, it will be inevitable that our processes are driven more with a customer orientation. So, as they say, the distance between 2 points is a straight line, right? The more I go elsewhere, the more I'm actually convoluted. So, the whole idea here is, how do I get to the target state in the shortest distance, which is addressing the customer's need, right? So that's in essence what I had for you today. Summarize: digital first, customer centric. We're talking about banking as a platform and platform as a service. Again, going back to the fintech ecosystem and collaborative open banking, agile culture, and obviously a lot of innovation that's likely to happen here. I'll conclude this presentation with this. I'm sure you have a number of questions to ask. But what I would encourage you to do is, as we get into the panel, and we jump quickly into the first panel, As we get into the conversations, I would strongly encourage you to engage, ask questions, share your thoughts. It doesn't have to be only questions. You may want to share your views, thoughts. Of course, there will be breakaway sessions or breakaway during the course of the day when you'll actually be having far more engaged conversations here. Thank you. Marwan, should I jump into the first panel? Back again. Well, I had to do the opening remark because my colleague Chetan Parekh, who is the managing partner for FinTech practice at MENA, he was supposed to be here, but for some reasons he couldn't be here. So you have to bear with me for another half an hour. But I'm going to actually be starting this conversation with a introduction to my panelists. We actually have the first panel of the day is actually about having a business leader's perspective, a strategic perspective on what we quote unquote are calling as the future of banking. So on my panel today, I have very eminent panelists, and let me invite them in the following order. My first panelist, General Manager for Retail Banking at KIB. Ladies and gentlemen, please put your hands together to welcome Mr. Othman Tawfiq. My second panelist of the day has actually flown in from the UAE. In fact, I had requested him that he should actually be on the panel because he will also be giving us some perspective on markets outside of Kuwait, someone whom I've been known for the last 20 years. Please welcome the CEO of Mawarid Finance, Mr. Rashid Al-Qudaisi. The third panelist for the day is the Chief Growth Officer for Payment. We have a lot to talk to him today on payments. Please welcome on board Mr. Khalid Al-Boas. We have with us someone who's actually representing the banking technology world. We have bankers here on the table. We also need to have someone representing the technology world, and we actually have someone who's based in Kuwait and actually been talking a lot about the market here. I would love to welcome the Product Director for Banking Solutions, Mr. ITS, Mr. Sharif Al-Mansi. Thank you, gentlemen, for being here, and looking forward to a very engaged conversation. I think the topic today is, when we're talking about future of banking, it means many things for many people. And I thought maybe we should start with some discussion about what a leader's view is, from the context of how things are moved from a physical into more digital, as people call physical and digital. And we'll probably start this question with you, Othman. As the world is moving more towards digital, what does it actually mean, as someone who's been looking at retail banking over the years? What does it mean for a bank in the way you would visualize, strategize, think about the future?
Okay. Good morning, everyone. Thanks to having me here. It's a pleasure to join that panel, which forward thinking of the future in the banking. صباحكم الله بالخير جميعا وحياكم الله بالpanel. To answer your questions, I think if we go back to the 5, 6, 7 years back, the banking or the sector are thinking that the bank will move fully into digital banking and the branches will disappear and all the customers, preparation will be based on mobile applications, and that's not the real situation. Still, the branches is a very key elements. I think balancing between digital channel and physical channel, which is more important, to be closer to the customers is more important. But the things are changing again now that previously a strategy force the technology. I think that the stage now we need to balance between both digital strategy and digital. I want to just to get an example of that. How the customers' behavior and customer centricity are changing the game. If we go back, and this is only my personal opinion, don't take it, about KIB vision. Previously, we think that the ATM will be the most important channel, and all the non-financial transaction will be happening on ATM from booking tickets, cinema, or whatever you can do through an ATM. But because the customer behavior more into the ATM is cash transaction and check deposit, maybe some transfer here and there, the bank changing their strategy and reduce a little bit investment on ATM and what's the capability of the ATM. Now forget about the ITM and the options, I'm talking about ATM investment. So this is just an example that technology is important, but customer centricity, that's driving the strategy and the technology embedded and the needed to invest on it. This is only my point of view on that.
Very, very interesting. I'm reminded our chairman used to say that many years back in the US, even to drive the customer behavior of moving away from tellers to the ATMs, they actually had raffles that were offered. If you had to draw from the ATM, then you would actually get people had to be incentivized to actually make that behavioral shift, right? But actually, you're making a very pertinent point. Technology is no longer just the enabler, but you have to keep it right in the middle of any strategy that you're looking to draw. And but it's also important to keep the customer in mind, and that's exactly something that I'm going to take as a question to you, Rashid. You've actually been an advocate of customer experience, driving, making sure that the customer is the right front and middle of everything that you do, and you've actually been a customer service specialist for many, many years. Now you're career. And I think this discussion that I'm going to have about is a banking strategy today, is it, in your view, is it really about customer insights that you're actually looking to drive? Is technology about getting to know your customer more? Is it about customer insights? Or is it actually about getting to service the customer more? I mean, where do you see this, the focus on, when I say customer, what does that really mean as a banker?
Thank you, Ram, first of all, and I'd like to welcome everybody to this wonderful event. I'm happy to be here in Kuwait, and I would love to share some of my experience coming from UAE and what's happening at the maybe other side of Kuwait. I look at the whole experience as a journey to our customers, but still at the end of the day, we are a bank. And we want to make sure that as a bank, we still have the pillars of a bank at all of the times. But the bank is meant actually to serve customers. And you can understand that those customers, their expectations keep changing as the technology evolves, as the new maybe services that get introduced in the market, as the whole surrounding around us is keep changing. So as a bank, we need to make sure that we are keeping up with this. So end of the day, as a bank, still we need to meet the customer's expectations. So we need to make sure that their expectations is well addressed. They need to compare it to what's been offered in the market at the best. I remember just going maybe to what maybe Azman said here. We looked at the ATMs, how to move the customers. But before that, I think there was one step before that where we were trying to how to introduce queue systems, where the customers actually can go to deposit money at much faster pace, where we need to introduce queuematic systems. Now at this stage, we are looking how the customers still can do their banking with the most convenient ways. So I think it's a journey. We're going to continue doing this. We don't know the technology can come up down the road. Is it going to be linked to the AI? Are we going to have a set of, as maybe quoting Uthman here, are we going to still have branches? Maybe yes, but we maybe will not see a normal human behind the counter. Maybe we'll see a robot to serve. But I think those are some of the things we might see. But for us, I think as a human, still, we want to make sure that we are, if we are a customer, being treated the way that we feel like to be treated. So if there is a branch we need to go to, we need to see the technology reflected there. If it's over the mobiles, I think we need to see that happening for us also as well. And that's my views on this.
One of these days we'll have robots on this panel and we'll have. But no, thank you, Rashid. I think you're resonating the fact that the challenge that bankers have, independent of which country you are in, are similar, and some of these are actually manifesting in more ways than one, right? Kuwait is a great example. I mean, we still remember the days when we actually still had to stand in a queue to get this. I don't know when we went to a branch last, but I agree. At the end of the day, we still have to deal with some of these old challenges as we embrace the new factors. But actually, go back to this ATM comment that you wrote on there. I'm going to take that to you, Khaled. We are seeing a lot of, supposedly, and you should validate if I'm right, a lot of shift that's happening from ATM dominance in the market to what could be more contactless e-commerce driven payments, right? And we see that happening a lot. Obviously, you have been a backbone in all the shift that's happening in the country as well as in the organization you represent. I recognize that the comments being made by the panelists here are their personal comments. It's not reflecting the institution. I think disclaimer for every comment today. But I still want to ask you, Khaled, as business leaders, what lessons do you think we should learn in the way this shift is happening, and therefore what should we keep in mind as we look at the future?
First, thank you, Ram, giving us this chance to speak in this panelist, and thank everyone for attending here and having us here, and thank you all the panelists here. Going back 20 years ago and see the shift from cash to digital to electronic payments. 20 years ago, we have about 60% of our payments in Kuwait, or around 60 to 70% ATMs transaction. Now, after 20 years, it's no more than 5%. So what drives this shift? Is it the technology or the customer behavior? I would say technology will introduce the service. The customer behavior will drive the technology to evolve to serve the customer expectation. So why customer used to have cash and go to the ATM and now go to digital e-com or point of sale? For two reasons. First, the technology itself much more advanced now to offer a seamless experience to the customer to do any payments. And also the devices or the technology become more advanced and more secure and even cost effective. Earlier, to have a point of sale machine and a shop, it is expensive. infrastructure will not allow you everywhere that can accommodate a point of sale or later on the e-com. So it was much easier for the customer or for the market to go to the ATM and just withdraw money and pay by cash. So I would say technology will introduce the service, but the customer behavior will force the technology to evolve to give the best customer experience. This is the way we will allow the service to penetrate the market. So I'll give an example of the tokenization we mentioned earlier. In 2015 and 16, there was the wearables that you can do a payment using your wearable, either a watch or a keychain. But the experience was offered to the customer. He need to go to the branch, he need to register, he need to get one wearable device and pay with it. So the onboarding process was not seamless, was not for the best convenience of the customer. That's why since 2015, we don't see penetration for this technology. The technology was there. Technology of tokenization, technology of wearable payment was there, but did not meet the customer expectation and giving him the best experience. So did not adapt to the market. So we still use point of sale, normal card, contact or contactless. When the technology evolved based on the customer behavior, and we introduced the Apple Pay, Samsung Pay, X-Pay, the experience of onboarding, very seamless. You just go to your mobile, add the card, in a minute you're all set. You do the payment fast, accepted everywhere. Then we can see market penetration more than almost to 50% of our transaction now it's X-Pay. So I would say technology, what we learned that technology will introduce the service. However, it should evolve to meet the customer expectation, to give them the best experience. So
it's a fascinating answer, to be honest. I mean, what I'm saying here is a technology that is either ahead of its time or behind the times will not succeed. So you have to be clear that the technology is addressing a very clearly identified customer need, and the customer need eventually propels the adoption and the use of technology. And the examples you gave both on tokenization and the wearables was a fascinating example.
I'll add to this. Also, you need to have the proper infrastructure, because even if the technology and the experience is seamless, if you don't have the proper infrastructure, the secure and the availability, also the same thing.
Correct.
The customer expectation to do a seamless transaction, not only onboarding the process. So you should have a proper infrastructure that's both security, secure, and availability. So having all this together, giving the customer experience to drive. So what about the technology is the customer behavior, but technology will introduce first the sales.
Yeah. I think that's a very interesting way of looking at it. Technology is sitting there, but ultimately it has to drive what customer needs are, and the infrastructure has to be in place to deliver that. And that takes me to the question to you, Sharif. You know, technology players have been there for a long time. Customer needs are evolving. Therefore, the bank's orientation to what they should deliver to their customers is also evolving. Do you think technology players are adapting to this change in the way the change that needs to be delivered to your customers, which are banks, in order to serve their customers, which is the end user, the customer who is ultimately getting the benefit of? Is that change happening seamlessly, or do you have a point of view on this?
First of all, thank you for attending this event, and thank you for having me here. Actually, yes, it's happening seamlessly. Currently, all technology providers are fundamentally re-engineering all their platforms toward shifting priorities of banking customers or banking themselves toward agility, customer centricity, scalability, All of this is affecting the technology providers to change platforms to adapt for these priorities in demand. So first, as a technology providers, we focus on API first and modularity. This will enable the customers to make integration with third parties and to offer services for their customers seamlessly. This will let them acquire new customers easily. And of course, this will enable them to comply with the regulations and ESG. In addition, also as a technology provider, we always we shift our applications toward cloud native and microservices. This will allow, of course, easy scalability for the bank, and of course, they can make multiple changes and deployment faster. And this will allow, currently also there is a lot of technology provider provide a containerized service that can be deployed into a hybrid or cloud native or public private clouds. Also, currently we are focusing as a technology providers on intelligence and analytic in our platforms. Now artificial intelligence and machine learning becomes no option. We have to comply with this. Most of the customers are requiring this. It helps in decision making, fraud detection. There is lots of use cases for artificial intelligence we see now in the market. Also, regulatory compliance and ESG compliance is also one of the things that needs to be available in any platforms. Now we can see that there is growth of demand for our customers for these requirements. So currently, we as a technology provider, we are not a traditional core banking system provider for our customers. We have to be their partner in innovation, in driving the future, to, as our colleagues said here, to be able to make the technology serve the customer needs. Okay, we need to adapt frequently. We need to adapt very fast in order to do that. Currently, also fintech and ecosystems is no option. Also, we have to comply with it. An API and open banking is very, very important for customers. This will allow us to innovate and provide faster time to market services for our clients and financial institutions. That's from my point.
That was a real comprehensive answer there, Sharif. I think Sharif ticked every box of what we're going to have in every panel discussion today. It was fascinating. Thank you, Sharif. We all talk about technology, and there was a lot of talk about customer, and we talked about innovation and banks needing to be adaptive. But often, going back to something which is more fundamental. Sharif just made a comment saying that knowing AI is no longer an option. That is a nice statement to be made by a technology solution provider. But as banks, how do we actually invest in the skill sets that we need to have? What do we do to actually make sure our people are ready to embrace the future that is arriving very soon?
Before answering Sharif or commenting on to Mr. Sharif as mentioned, let's go back one step back. We are organization are looking for profit, and referring back to your two-slide presentation, shareholder or fees and commission, we need to increase it, and there is an opportunity. So this is the way that from strategic point of view that the bank are looking for. Now, how utilize and get the benefits and outcome from customer centricity or technology to reach that goal. Let's agree on that. Okay, clear.
100%. That's a very powerful statement. I think we can't forget the fact that while serving the customer, we can't forget the shareholder.
So now to continue what I want to talking about to give more real case answer for the audience to get the benefits more than a theory and the general statement. The bank need to look, previously the bank providing regular product and service, which is finance, deposit, credit card for the customers. Now, by utilizing the technology, I was talking about KIB, we need to cover the life cycle of the customers and try to find fees and commission that we can increase it from here and there to maximize our profit. For example, on that, I will not talk about retail mobile app or corporate. We are creating a marketplace, which is Itali, which is the customer can go and shopping through there, and we can make money out of the discount that we get from the merchant itself. We are creating a healthcare application, Salamtic, in cooperation with a top healthcare company, Mazaya, in Kuwait. So we are covering Mubadar, which is entrepreneur applications. So all of that digital enabler and partnership with fintech and with the company, first of all, to cover the customer need. Secondly, to make the transaction seamless for the customers. Thirdly, what is most important, to make money and increase our fees and commission and return on investment for our stakeholder. So now, refer back to Sharif, utilizing or try to find the best way of adopting the technology to maximize the profit. Now, maximizing the profit will be either by reducing cost, by efficiency, or by save the customer problem, which is increasing the customer centricity and making more money and stickiness of the customer. This is, I mean, my point of view.
And what about getting people ready? I mean, you see the skill sets that are required to deal with the future is something that
see now with AI, with ChatGPT, let's agree that there is some job will be not exist, but there is a new job will be created. Okay, and so how to search an AI, how to develop AI, how I mean, all this kind of job will be created. We now, I will talk about my personal experience or my personal point of view on that. My dependency on secretary in the last 6 months is maybe, I don't want to see zero, it's 10%. Okay, and translating memos and preparing memos and sending email. I mainly use her maybe just to answering the phone, and if I have now any application I can integrate it with the bank landline system, from tomorrow I can stay without a secretary. So this is only take it from personal point of view. I don't want to reach to MIS analysis. I mean, we are talking about now replacing the staff in the branches with the AI robotic staff. So we need to move with that technology. It's not the way that we accepting or no. It's increasing efficiency. It's giving the right advice for the customer. We will stop the staff mistake or errors. Standardizing of the service will be high. I give you an example by analysis the data that maybe I did it last month in the bank. I noticed that any customer with no mobile banking applications have one product. And any customers who have mobile applications is 2+. So cross-sell per physical channel and digital, it's clearly. Secondly, the customer who's leaving the bank percentage are more than the customer who don't have mobile applications.
Interesting.
Because they are dependent on the staff experience, mistake is happening, delay is happening. But if you go to mobile applications, more standardized and personalized service. So if you can take the same technology and embed it in the branches with a different layout, I think the service will be, much higher, and the customer centricity or customer satisfaction will be much more.
It's a very interesting, extremely interesting perspective there, Othman. I mean, what you're saying here is that if you could invest your energy in ensuring your customers become your digital banking channel customers, then A, your likelihood of cross-selling is much higher. B, the chances of retaining the customer is much higher. And the underlying reality is that is happening not because the customer is actually choosing that way. It's because the experience that is being offered and the efficiency offered is is much higher. That's a very, very fascinating takeaway for our audience here. And thanks for that, Uthman. But I'll actually take another perspective to you, Rashid. And this is, just what we just talked about, a lot of initiatives that are happening, in the banks, and every bank, every institution is in a constant mode of change, either the underlying platform or the technology or digitization, you name it, right? As a leader, as a CEO, how do you see the balance between making sure the change happens, but ensuring that you aren't getting off track with your agenda, which means that you actually have to de-risk the transformation program from moving fast. You still need to move fast, but you still have to ensure that the change is not impacting what your agenda is. And Othman nicely pointed out that my agenda here is to ultimately do business and here to do business, right? Not just run a technology program. So, how, as a CEO, do you see that balance happening, and what are experiences you would like to share?
Being a CEO, I think it's a tough job, just to create the value for the shareholders. And the value of the shareholders will come only by having the customers. And we know that all of the customers, we don't have the perfect customer. I think we need to agree on this. We would love to go out one day and we do business only with the perfect customers. That means they are well educated, they know how to use the AI, they are well into the apps. Okay, but the real life doesn't go like this. So when we look at the customers, we need to understand, their preferences, and based on that, we give them the right solution. Now, and that takes time, because you need to make sure that we approach the right customers with the right solution at the right time. I'll just maybe bring a good example. Like really, we have some of the new banks which are digital, and they talk about the number of the customers they have. Some of them, I would do like they're already touching more than 150,000 customers, but they're only giving them specific product. That's lead to remittances, but they cannot give them personal finance. They cannot give them auto finance, because the experience around that, still they did not reach the ultimate, the best perfect way where they can bring them on board to suit their offering as a digital bank. Till that time, those customers, they're going to go to the banks who are meeting their requirement, meeting their preference. So if I'm buying a car, I'd like to go maybe to a branch that dealing with the dealership, I can negotiate with them the offer or the profit rate or the interest rate. So for me as a customer, if I put myself in his shoes, I would like to choose the right offering, maybe the right channel of communication, and maybe the right time when should I go to meet them. And yes, we can see that through the digital approaches, we can request for so many things. I think maybe doing the remittance, we can do it 24/7. But when it comes to requesting for a loan to buy a car or a personal finance, it's not something that I can request on the spot. I still need to go to a branch. I still need to go to talk to the call center. I still need to send a request, either if it's through the app or it's through the branch or any of the available channels. So I think we need to still maintain that relationship going forward. That's very important to cater to those customers. As I said at the beginning, we do not have the perfect customers. On one side, we're talking about AI, digital transformation, but we're talking about a normal human being who is a customer. Some of them, they're very much advanced on the awareness of the technology, but so many of them, they're not into it. They are not into the apps. They're not into the technology. So still we need to cater to those, and they are also reflect on what kind of value we can give to our shareholders at the end of the day. If I want to discuss, take one niche of customers who are high net worth customers, I would say so many of us will say those are not into the apps. They need to talk to somebody face to face. They need to talk to somebody over the phone, but they're not willing to go and put their money on the app. I think we need to always keep in mind our customers, they are not perfect customers. We just need to meet their expectations. We need to meet their requirement at the times that they need. And sometimes we need to go off the way. We need to go off our concept approach here when we talk about the digital approach, AI approach, the new banks, the future of the banks. So I think that's very important to look at. And this is going to be with us in the next, I think, I will not say even like in the next near future, but this will be still with us as we move forward. We need to have this, parallel approach to our customers where they still feel they're comfortable to use all of the means that we have to interact with them.
There is no perfect customer. Not a critical takeaway from this conversation, Rashid. There is no perfect customer.
Just a comment on Mr. Rashid. I think the clear segment that you are targeting will identify the rest of the issues. So if you are targeting, let's say, teenagers is different than 20 years old or 40 years old. So identifying the right customer that you want to reach will drive the rest of the information, regardless if they are preparing technology adaptation or prepare physical.
No, very well said. Ultimately, as they say, it's not one size fits all. You have to find out who's your customer and then make sure your products are built towards that. And that is my question to look at it. I mean, this is, payments is evolving, experience is evolving, and obviously banks are looking to deliver, what those quote unquote expectations of customers across different segments, as Rashid says. The not so perfect customer, but you obviously have to deal with what expectations cut across different segments. So my question to you, Khalid, is how can banks and players, payment players specifically, target what you call as the new evolving customer segments?
Okay. I agree with Mr. Osman, what we have said. We need first to understand what is our target customer segment. Each segment will have a need or a preference. So the solution that we will provide to this segment should fit his expectation. So maybe this product will fit this segment, but it's not used for the other segment. It's not solving the problem of the other segment. So first we need to identify our customer segment. So we have two customers. We have the merchant who offer the payment device for the acceptance, and we have the customer, which is use the payment instrument to do a payment. So in the payment domain, we need to understand each customer, and then within this customer, like either the card holder or the merchant, different segmentation. What's the need of each segment? I'll give an example. Back in 2015 or 16, there was a product, an umbrella product, that we need to introduce to the market. It was very successful and have very high penetration rate in other regions. Why? Because at that regions, they don't have a proper infrastructure of landlines and IDs. So they depend on the SIM cards. So they depend, and the internet and the landline is very expensive. So they would use the Ambo's device as using their mobile communication and SIM card to do a payment by connecting another device as a PIN pad or a keypad to the mobile to do a payment. So this technology served a need for a segment as a merchant in one region. In Kuwait, communication is not expensive, infrastructure is there. So when we introduced this service, we did not find any market penetration for this device. we have a lesson learned. We need to understand the merchant segment and their needs. So if you analyze and understand the targeted segment needs, then you give them the right product, because it's not one product fit all. That's from merchant type or merchant side. From card holder, I'll give another example. We had a bill payment for the ATMs. We have introduced this in 2014. We launched the service only for 6 months. Then we stopped it. What we have seen, that we have two segments, main segment, either new generation, they prefer to go online and do the bill payment. You will not walk to the ATM and do a bill payment. And you have the older generation, they will just walk into the branch and pay there. So we end up, nobody is using the ATM to do a bill payment. So we need to understand also the card holder or the user of the payment instrument behaviors and segments. So when we introduce a service, will it fit their needs or not? So by understanding each segment, I will not say there is no perfect customer, but we need to understand his need for each segment. So we introduce the proper product that fits his needs.
We need to have a perfect product, even if it was not a perfect customer. So we need to have the right product for the right customer.
Of course. Yeah. So we'll go back. If this product will not meet his expectation in terms of user experience, the value added to the service, and of course security and availability, then we lose.
Well, I mean, we do a lot of work using the balance scorecard. I'm just reminded that, ultimately to deliver the financial expectations of the shareholder, you have to meet with what you call as the right customer segment and the products that deliver the customer expectations. And you need to have the right processes that supports it, enabled by technology, right? And they all link to each other. I think that's the whole context here. And if I take this, therefore, the technology aspect, right? So we're talking about future-proofing here, right? I mean, we're talking about making sure that you aren't surprised by something that future is asking of you, that you aren't ready with, right? So what capabilities do you think, as a platform, as technology platforms, do banks need to be focusing on that allows them to actually be insured, protected, insulated from quote-unquote future shock?
Yeah, as I can hear and as my colleague said, that we need to have a product that fits the customers, each customer segment, and also there is no perfect customer. So this put pressure on technology providers to try to provide a comprehensive platform for the business team in order to be able to create products and services that will cater for different customer segmentation and also a different customer behavior. So I do believe that banks will require first composability and modular architecture. This will allow them to plug in, plug out applications and modules very easy, and will also foster innovation. Second is real-time processing and data stream. This is very important because this will allow all current customers now needs a real-time of their interaction with the bank. Like, for example, when you do a transaction in an ATM, you instantly will have a message says that your account has been debited and you have this balance. Also, from regulatory point of view, they need to have this real time because monitoring this transaction is very important. Second is also an end-to-end digital journey. You need to have an end-to-end digital journey, and all the application, and we need the capability to be able to have an omni-channel. You start anywhere, end anywhere. This is also very important for them. This will allow banks to provide services for all kinds of customers, so the tech-savvy customer, or the traditional customer who are going to the branch. In addition, also, we can say that cloud and scalability is also very important. This will allow banks to deploy faster applications and be able to target customers at any place trying to use their platform. In addition to, of course, compliance with regulatory, they need to have a platform that allow them to comply with regulations and security. This is of utmost priority. And of course, one of the main things is intelligence and data analytic. This is also very important because this is actually the source of analyzing what happened in order for them to be able to create new products and services that will, at the end, generate profits and address the needs for
Be modular, ensure you are actually delivering the end-to-end journey across all customer segments, ensure you're compliant, be scalable, be cloud ready, have the right analytical framework. I think all of them are very valid comments there, actually. Thank you. I'm going to quickly open up for questions to the audience. And before I get that, I would love to have maybe a rapid fire, which is like a 1 minute question, the same question to all the panelists here today, right? We talked about a lot about technology, we talked about customers, we talked about innovation. Let me ask a very fundamental question. As business leaders, what kind of shift should a bank really do to really be future ready? It could be strategic, it could be cultural, it could be structural. And then I start with you, when I go with everyone. Same question to everybody. What shift should banks focus on to be future ready?
Okay. I think, first of all, leadership mindset change, the acceptance, the change and the technology adaptation. This is one thing important. Secondly, I think the traditional bank need to change the structure and segregate between digital arm and physical arm so to keep focus, because the way that fintech is operating is important. So I think the banks need to divide it into two half digital corporate retail banking and half of it, which is fintech operating model, which give us more flexibility and less restriction on the bank to operate. This is, I think, the two important decisions the shareholder need to take to sustain the profitability or the growth that banking sectors have that you presented previously.
Thank you, Rashid.
Yeah, I think from my side, we need to make sure that, within any organization, we have people, and it's very important that they start having the tools, the know-how, how they can adapt to the changes around them. That's very important to see where are the opportunities to capture the technology that's been enforced on all of us going forward. By doing that, that means we should have, or to make sure that our human resources within the organization, they get well trained, have the right information, the right knowledge to keep up with what's happening around them. If you have the right team within the organization, I think this will make you go through any challenges you might face down the road. That's, I think, one of the main things that you need to do, because we can hear here like some of the technology that's been presented 20 years ago, it's not here. 10 years ago, also it's not here. 5 years ago, it's not here. So what you're going to have here now today is something that's going to continue with us going forward. Maybe not. But for us, I think we are still here. So it's very important for us that we should be able to cope with what we anticipate to happen down the road. I think that's my...
Invest in people and be ready to accept change. Very thoughts of wisdom there. Thank you, Rashid. Khalid, more views.
I think we should focus now. We have moved from commodity, cash, product, card, experience. I think we should focus on enhancing experience of the customer. So we are not anymore should sell a product. We sell experience. Customer now, especially new generation, looking for the experience, not looking for the product. That's one thing. Another thing, I think banks should partner with fintechs. Fintechs can drive this experience and offer it to the customer. And financial institutions should be the backbone, the infrastructure. Front of the customer should be with the fintechs, partnering with the fintechs to offer understanding those customers, offer this new experience. Yes, speak to the market. Now, technology evolves very fast. So, having now introduced a new service with a project 3 years, after I introduce the service, it's an old technology. So, speak to the market, experience, partner with fintechs.
Brilliant. So you're not selling products anymore, you're selling experiences. If you want to deliver experiences, then fintech partnerships are key. And the takeaway there is your first to the market, which means speed to market is a very important aspect. Thank you, Khalid. Sharif.
From a technology company that support the business and the financial institutions, we think that we need to focus on the next generation consulting, okay, or consultants. In traditional days, always banks may complain about consultants coming to the bank. We listen to what the bank needs, and then we do what the bank needs. No, it shouldn't be like this anymore. We should be proactive. We should be shaking hand with the banks. We should come to them and tell them, listen, there is a new trend coming here. Together, we are going to offer this product and service. So I think the next generation for technology companies that are working with banks is be proactive and focus on adapting to technology and generate much more use cases that will enable the financial institutions to provide a better service to their customers.
Which goes back to what I was saying. I mean, if banks have to develop great services, experiences, fintech partnerships are critical, and fintechs have to be thinking about what the next gen ways of solving the problems are. Very well said, Sharif. Thank you. I'll quickly open up for questions from the audience. Any comments from anybody, please? Yeah. No questions? All happy? I think everybody is waiting for the coffee. But we won't get to go into the coffee in the session afterwards. But listen, if there are no other questions from the audience, I must say that this panel set the tone for a very interesting day ahead. I think we will have a few other panels coming after this, but I think we covered a number of topics. And if I just quickly summarize the last session, the last questions that were answered, we're talking about leadership mind shift. We're talking about getting traditional and digital, coexisting. Investing in people and the change with the tools and the know-how, and getting people trained. Moving from commodities into experiences and driving fintech partnerships. And fintech partners actually solving for the new age solutions and next gen solutions. I think that was a brilliant, perspective sharing by the panel. Ladies and gentlemen, please put your hands together. Thank this panel for a wonderful speech. The next session is with Ramki, is that right? Ramki, you take the stage.
Yes. We have one. Good morning. Good morning, all. We have one more session before the coffee break, so I think Ram mentioned about it. So, forget a long name, you can call me Ramki. So, you heard from Ram so far, so now you heard from Ramki as well. So, you heard about the trends in banking. You heard about what the leadership perspective is about the future of banking. Let's look at technology trends. Why technology? You just mentioned Mr. Othman saying that strategy was driving technology, but not anymore. Technology is setting the strategy of every organization, and banks are not an exception. So how technology is evolved, how technology is evolving, and how technology has actually helped in, or how technology trends have helped in banking to evolve. So that's what we will see. We will definitely look at what is happening globally in the region and what is happening in Kuwait as well. Now, just to set the context, right? We heard a lot of things about from the bankers saying banks, and banking. Now, there's a normally people keep saying that banking will exist, but banks will exit. So, is that going to be true? Let's see whether technology will make that happen or not. So, what are the trends that are happening globally, right? AI and machine learning, no need to talk about it. Everyone talks about AI. Everyone says there are multiple things happening around AI, whether it is AI, whether it is Gen AI, or whether it is agentic AI now that is catching up. You all would have been following closely what Mr. Trump is doing globally. He does every day he comes up with something, but yesterday he came up with something very interesting. So it's not just that he removed the embargo from Syria, but he also did a lot of things in Saudi. And one of the things that has come up in Saudi is the partnership that has happened between Humain, you know about the company called Humain, which is set up in Saudi, the first AI company in Saudi that's going to be driving AI in the region. They have partnered with NVIDIA, AWS, AMD, and Cisco to develop not only AI infrastructure, but it's going to be green AI infrastructure with achieving 50 megawatts by end of this year and 500 megawatts by the end of 2030. So everywhere AI is just catching up, and banking is not going to be left behind. Digitization and automation, I think we've talked a lot about it. I mean, there's no bank that is not doing anything around digitization, and there are even a lot of digital banks that have been coming up across the region and globally. We just talked about Rashid making a point about products, how digital banks are coming out with new products, and where they are basically focused on primarily remittance and experience and accounts, but lending. When it comes to lending, that is not typically the day one agenda for most of the digital banks. But how, if many of them would have been following the news, what was the announcement of Revolut yesterday? They have piloted with a mortgage or digital mortgage solution. max one business day you will get the mortgage loan disbursed. So that's what they're doing, and they want to roll it out across the globe wherever Revolut offices are. But yesterday they have announced that they have piloted and it's gone successful. So digital banks are also catching up fast. So don't think that digital banks are only going to be working with experience and accounts, and traditional banks have the advantage of the balance sheet and hence they'll be able to lend. No. Digital banks will start catching up fast. Wealth platforms, yes. So that is something which some of the digital banks are now started focusing on, that I don't want to target mass. So digital banks was once considered to be for mass market. No, digital banks have now started targeting even wealth management customers, HNI customers, and that is also catching up very fast. And it's not that HNI customers only prefer face-to-face interactions. Yes, there are some people who prefer face-to-face interactions, but please understand, HNI, your wealth management platforms are not limited to only your grey-haired people like me. Even youngsters are now the target for wealth management solutions, and they prefer more digital solutions. Embedded finance, no need to discuss about that. You embed finance everywhere. Banking is not limited to banks. It's opened up, and that is where the shift has happened, right? When we talk about technology, we talk about customer behavior and experience, but what has happened in addition to both of these is that banking has not been limited to banks. It was, but no more. It's opened up with embedded finance and open finance. Financial decision making and cloud-based. Now, cloud-based is something that is changing the whole perspective and narrative of how banking is. It's not just a technology, it's much more than technology. So many of them perceive cloud just as a technology, and then this question comes in, whether I need to move to cloud, whether I don't need to move to cloud, what do I look at, how do I look at security, how do I look at data privacy, and so on and so forth. But with cloud, there are a lot more benefits that come in from banking perspective. Now, if you look at from a Kuwait market perspective, now there is a Vision 2035 now. There's a Vision 2030 for South, there's a Vision 2035 for KSA, for Kuwait as well. And what is this whole 2035 talking about? It's talking about a lot of things, but one of the key things that it talks about is financial inclusion. And who drives financial inclusion? Obviously, banks. And what is driving banks? The way they are able to adopt technology, the way they are able to, bring in the whole, the entire dimensions of customer experience, the way they are able to take the solution to the market, to the customers, is what central bank is, advising, or central bank is actually coming up with based on what Vision 2035 talks about. Now, if you look at it, the expectation from there is that 55% online banking adoption. When I say online banking, it's all digital. So 55% adoption is what we're looking at. When I say this is full banking, so we still have this physical experience. We not take branches away for some time, but we still have not. We have still maybe touched the tip of the iceberg with the millennials maybe. We still have not gone to the alphas and the betas and the Gen Z, and when they all come into the banking world, when they start banking, things will change, right? So 40% transaction via digital channels, 60.8 billion digital. That is the volume, if you look at it, of payments through digital channels. And 5.2 billion, if you see real-time payment, right, by 2020. Now, this real-time payment, obviously with WAMD, as we call it, or WAMD. So with that, the instant payment has actually increased. The volume of instant payment has increased, and it's expected to touch 5.2 billion by 2028. Look at this. The key is the first point: 99% penetration it's across the region, right? Including Kuwait. There is a huge penetration of internet. Now, ease of transactions, that's another thing. Driven by, we just had Khaled talking about a lot of things that KNet has done, and he also mentioned about Apple Pay and Google Pay compared to what wearables were now. Yes, that has definitely shifted the whole way of making payments. And interesting point is, you get. We should not say that, but COVID was a game changer. But we should not have COVID is something we should not have something like that in the future. But it was a game changer. Before COVID, there was a lot of transactions still happening manually. But with COVID, when people started understanding that they need to get in digital channels, and the moment they started adopting it, the adoption just grew faster. Then, if you look at the IT market to reach 39.8 billion. IT market means what? There are a lot of banking technology providers and fintech providers over here. It should be a good news for them. 39.8 billion is not a small amount. And this Kuwait automated settlement system that is being planned by Kuwait is definitely going to also increase or also make payments easier, because one of the key things of payment for banks is settlement, and if that is made easy, then it makes life easier for banks. Now let's just quickly go to the payment landscape. If you look at the payment landscape, one of the key things that I would like to touch upon is the cash withdrawals. And people were talking about ATM cash withdrawals. There were a lot of cash withdrawals that were done before COVID. Post-COVID, things have started changing, steady decline of cash transactions, and cash transactions are across the region, across the globe, across the region is declining, and Kuwait is no exception to it. And a lot of transactions are going on through POS online, so whether it's e-commerce, whether it is using QR code payments, whether it's using payments through your Apple Pay, Samsung Pay. So all kind of digital channels and digital mode of payments have increased. Now, if you look at the payments also, see there's a digital payment has been growing at 11% CAGR, right? And expected to grow from 23 onwards to 27 at this rate. Now, this is a very good percentage for a smaller market like Kuwait, because there's already been a good amount of adoption, but still the increase means that by the time you're talking about the 99% penetration of internet and everything, you're going to be completely a mobile-driven economy. Now, interestingly, there are a lot of based on financial inclusion. There was a discussion that happened in the market a few months back about how do we also look at getting all the unbanked customers and move these unbanked customers completely through use not necessarily banking, but use digital channels to make them move away from cash. So there's a lot of these, a lot of these initiatives actually going to completely eradicate cash, because there is a pocket of where there are cash left, which needs to be eliminated as well. Which obviously is going to give a lot of opportunities for banks. There are going to be a lot of opportunities for fintechs, because, like it was mentioned in the previous panel, does banks need to solve all the problems? No, banks doesn't need to solve the problem. Bank can be just a sponsor of some of these initiatives, but it could be fronted by the fintechs. There are a lot of fintech which will help you to do it much more effectively and drive both cost and process efficiencies for you. So it's always good that you work closely with some of these fintechs and reap benefits. Now, coming to why do? Now, obviously, we have a panel around transaction banking and payments next. And why transaction banking? Because when you talk about I would say the trends that we're talking about, we're very detail oriented, right? There's all individual retail people, but that's not the case. There are a lot of trends, a lot of things that are happening in the corporate side of the banking, on the enterprise side of banking, whether it is business banking, SMEs, corporates, and this all been driven towards more efficient transaction banking services that's being provided to corporates. So if you look at it across payments, collections, trade, any kind of technology transformation, the corporate side, omni-channel, APIs, yes, things like, obviously, Basam here from Rubian Bank, something is reflective of what you're doing in the country to revamp your transaction banking business. Now, one of the key things that came out in the previous presentation was about the operating income, but at the same time, your fee income being very low. Right now, most of the banks have this advantage of capitalizing on the interest rates, which were on the higher side till about last year, and then now things have started going down. And obviously, most of the banks, the NIMs margins are under pressure. So what is the best way of working on your profitability on your margins is to focus on your fee-based income. And for that, obviously, with corporates is where you get a lot of corporates and advisory businesses from banks is where you get a lot of the fee-based income, and that is where you need to start focusing. And there are a lot of initiatives that are happening globally, and which is now some of these trends that had caught up with the region a few years back, and markets like Kuwait have started to work on it and sure that some of these initiatives that we are talking about in terms of ensuring that you have a very robust receivable and collections management platform, you have your payments streamlined, you ensure that you digitize your trade platform, you also look at completely automating your trade process, because trade is trade end of the day, right? It's standardized. So how do you automate it, standardize, and a lot of AI-based platforms that help you to completely standardize the processes to ensure that there's efficiency. So you bring that, and then the whole thing around the open account financing. How do you completely automate that? There are banks which have presence across the regions. How do you kind of bring this whole deep tier financing across you, leveraging your cross-border branches? So that kind of helps you to help increase your fee-based revenue as well. Then API and open banking, obviously, even the corporates are now very keen to work with, and even the corporates are transforming. It's not just banks, the corporates are transforming, and it becomes easier for you to work with these corporates and completely transform the way you do banking, so that banks no longer, the corporates no longer rely on the RMs, because that is one of the pitfalls of corporate banking, right? So RMs move, clients move. You don't want to have that. You want to remove the dependency from RMs and move it to a much more seamless experience, so that the clients don't move the RM and they stick to the experience that they get from the banks. Now, if you look at some of the trends, right? Cashless society, BNPL is catching up in the market. You have Tamara, which is in the market and trying to capture most of the market by almost talking to a lot of the retailers and a lot of at the point of sale. Now, interestingly, Tamara has these two strategies, right? And how many of you have interacted with Tamara? They normally don't always approach the banks. They approach the banks, but they also approach the customers. And they have been able to get a lot of traction and a lot of success over there. And then they've seen banks tagging along with them. But Tamara, in some countries, also have got their license to lend from their balance sheet as well. Otherwise, they have partnered with banks. Cross-border Afak, everyone knows about it, the Gulf payments. Now, Muna is also coming in, so it's not only going to be GCC, it's going to be more inclusive from the Arab community. Then we're talking about the ISO 20022, which is coming in from SWIFT, the mandate which allows you to use that entire the ISO 20022 message framework, because that is just not a compliance mandate. So no bank should look at ISO 20022 compliance as a compliance mandate, because it brings a lot more benefit to you in terms of data enrichment, in terms of using the data that you can monetize, apart from just complying with SWIFT and your meeting your compliance mandates. Obviously, e-wallets, a lot of multifunctional platforms. There are a lot of cross-border, interoperable wallets that are in place today, which also can be leveraged. Given that you also have an expired population, and how do you capitalize on their needs as well. Now, coming to digital banking quickly, on the digital banking in GCC. A lot of banks now, people can talk about, when people say what are the two top digital banks, profitable digital banks, everyone talks about Revolut and Nubank. But there are a lot more banks in the region which are across GCC. Now, interestingly, if you look at it, right, there are 2 in Kuwait, there are 3 in KSA, there are 2 in Bahrain, but 10 plus in UAE, because UAE went with the adoption much earlier. Qatar, Oman have 0, but look at the readiness index. Readiness index is based on primarily what people think, what people want, what the customers want, and how customers are ready to adopt digital banks. But obviously, you need regulation to support it, and there were delays in the regulations being published. And there are, if you look at Qatar and Oman, they came out very recently, and there are licenses pending with them, and there are already work with some of the banks and industrial houses to actually start promoting digital banks. KSA, while there are 3, which is basically why there are 3, it is basically Vision is still not fully launched. It's FCCPA 360 and new. Hala is a fintech which is actually applied and in principle approval to become a digital bank for SMEs. Vision Bank is live on the stage 2. They have not been gone with the full-fledged launch, but they are in the process of getting that license. There are 2 digital banks that are already working today to get the license approval. There are 22 licenses with Sama. 22. It's not 1 or 2. 22 licenses with Sama. So huge potential for digital banks, and there are consolidation happening within the traditional banks as well. So there is a huge footprint of digital banks in the region. Kuwait has 2, and we have already also told that there are 3 or 4 licenses pending with digital bank with the central bank at advanced stages, and you may hear probably by end of this year. If you look at digital bank, right now, the size is approximately 1 million customers, where we're talking about. Primarily, these digital banks are focusing on retail and SMEs. They're not looking at corporates at the moment. There are very few digital banks that are targeting the corporate, targeting the SMEs and the retail segment of the customers. Now, if you look at the typical customer preferences, right now, people talk about experience. Now, experience is one part, definitely most important part, one part of it. They want the products. Now, the products are typically account opening and remittances that retail banks focuses on. But there's an increasing need of financing as well. Because many of the customers, including you and me, would definitely feel the pain of going through the process with traditional banks and getting a loan or getting a finance, whether it is from an Islamic bank or whether it's from a conventional bank. But that is what they're expecting. So they are now seeing the experience they get from digital banks in terms of getting themselves onboarded, account opening, payments, and that is kind of now started becoming a kind of a commoditized element from the digital bank. So now they're looking at is how I will be able to get loans easily. How can I get loans without going through the hassle that I go through today with the conventional banks? Because many of them want a loan immediately. So it's just not like a consumer durable loan that you get through BNPL kind of a mechanism. But if I really want a personal loan, if I really want a vehicle loan, I really want a mortgage loan. How quickly can I get through is what people are looking at. Now, if you look at vehicle loans, yeah, there are some places you might get it instantly, where there is a tie-up between the dealer and the banks, but you don't, but not necessarily that you may want to go and buy that car from that dealer. So it should be more agnostic rather than dealer dependent. So that's the kind of experience that people are looking at, and that is where there's a lot of I would say, expectation from the clients. And in that context, the news from regulators today is actually going to be an eye-opening, and people can actually start looking at if it can be done. So it's not difficult; it can be done. Yes, there are challenges on the regulatory side which needs to be overcome, but it's quite possible. There are other things. So there are only 2 digital banks, but as I said, there are 3 or 4 already in the pipeline, and then there is a amount of untapped segment in the market. But if you look at what VA has done, it's primarily focused on youth and students. So that's how they started it, right? So they wanted to focus on youth and students, but it's, as I said, that's the tip of the iceberg, because the moment you start talking about banking, digital banking, you have a lot more. Because even I presume that I can see a lot of, at least I'm happy to see a lot of gray hair in the room, because normally where I've gone now, I only see young people, and that kind of feels me that, okay, I'm not belonging to this generation, but I'm happy to see that today. But even us, how many of us prefer to do digital banking? I mean, to do banking digitally rather than going to branches. I hate to go to branches. And the only time I pick up the phone is if something is not working and I need to speak to a person not through banking, to fix the problem, so that I get back through mobile, not to get the banking done through people. So that's what it is, fintech partnership and the security. See, one of the key things, security brings to a very important topic, right? Now, if there's anything that is holding back people like the gray actors, and again I keep saying like us, back from going digital is only security. It's only security. That assurance is given. I would say, I'm sorry for your digital branches can be shut. That's the only thing that's holding people, because if I talk to my parents, they are also happy doing it through their mobile, but the only thing they raise concern is security. What happens if, because there's a lot, in the name of awareness, the government has created a lot of noise, and people are starting getting scared because of that. Because what if I get duped? What if I get a call and I presume that it's going to be a banker, and I give, by mistake, reveal certain things. So that is one area which, if that awareness is converted into an opportunity, and that the whole, the generation is actually given that comfort. That, digital banking, it will be like a hockey stick moment, right? Because apart from not just the youngsters, but even the older generation would prefer to go completely digital. They still do digital, they still do it, but there are certain transactions where they still want to visit the branches. Now, obviously, we just talked about Kuwait 2035. So obviously, there is a lot of expectation on the whole financial inclusion, the growth of the whole banking sector, ensuring that, yes, that's an important point, that was touched upon, that, yes, we talk about everything, but at the end of the day, we have to be profitable as well. Yes. So that's what they think about bank performance, strong capitalization, liquidity, and profitability. That's what they're saying. But at the same time, looking at the customer experience and looking at how you improve the overall banking ecosystem. Then they're also talking about how do I digitize the KYC. Now, this is a very interesting thing. Now, one of the initiatives that's coming up from 2035 is to see how I could completely digitize my KYC so that the onboarding is much more easier. Because one of the key things from an onboarding perspective is to ensure that you have a very seamless KYC experience. Because that is one thing that could potentially, break your chain when it comes to onboarding of customers. Now, so what are key differentiators for those digital banks that technology is driving? So self-onboarding, that's when this whole KYC that we referred to earlier is a key initiator. straight-through processing, generative AI, hyper-personalization, and UI and UX. There's no brainer to go through each of these points. Everyone knows about how important hyper-personalization today and how the UI UX has to align with the whole experience that we are talking about. AI. We just want to touch about a few trends and deep dive about those AI. We have a panel on AI, so we will listen to the experts from the industry. We'll know what banks are doing, but quickly on AI. What is the AI in banking market in 2024 was $31.3 billion. And Gen AI of that was 1,260 million. So if you look at it, and the growth has been expected was about 32.36%. Now we did the whole of 23, 24 was driven by Gen AI. 25 is now agentic AI, and there is no stopping of AI. And there is in every bank, digital bank today. Whenever people are formulating their strategy, they don't say we are a digital bank. Now they've started saying we are an AI-led digital bank. Now what AI, so the whole experience that we are trying to bring in is all going to be driven by AI, which means that they want to actually create a complete onboarding experience, which is as though it's not through the app. It's not that you're downloading an app kind of. So you're in their portal, and you go to the portal and you say that you want to open an account in that, and it automatically helps you to download. It automatically so you're actually engaged with the customer, with someone. You're engaged with the AI, you're not engaged with the person. And that AI is seamlessly onboarding you without even knowing how it is, and the onboarding is done. You're not doing anything, you're just like talking to someone, conversing within the app, and you're getting seamlessly onboarded. So that's the kind of thing they're looking at. And then you get stuck somewhere, you're anywhere in the world, you get stuck somewhere, you don't call anything. Through the app, you initiate, and you're actually working with an AI agent who's actually not just responding, but that AI agent is actually fixing your problem. It's fixing the problem in the background, and your transaction is being done. So when you're talking to someone, you get stuck, you're not able to do your payment is not going through. Earlier you used to call, then they used to raise a ticket, then you'll get a SMS, then you'll call after some time to check on it, and then someone, that's not going to be the one that's going to happen. That AI is going to be trained enough to actually take your problem, listen to you, while it's conversing with you on to understand the problem, in the background it's fixing the problem. And by the time your conversation is done, the transaction is done. And this conversation is not going to last long. And this conversation is not, and it's not going to be that you have to wait for hours, minutes to get to an agent. No. It gets automatically redirected to the right agent. And then your problem, your transaction is done. No longer are these agents going to be just looking at some FAQs and responding. They're going to be actually solving the problem. So everything is going to be AI driven. So US is continuing to dominate the markets in AI and banking, but no longer the case. US itself is now coming to the region. So if Trump is coming here and asking money to invest in US, so obviously things are going to change. Retail banking has got the most number, but in corporate banking, there are a lot of things that are happening on the AI side as well. And fraud and cybersecurity. So if you look at AI, AI works with you on your experience, or the process side of it. It works on the control functions, and then it works on your experience, the customer facing functions, right? So even today, if you look at it, AI, even before AI, the process functions were always addressed through RPAs. So with AI coming in, the focus has been always on the control functions, because that is where we want to. There's more push from the regulators. So that's where the focus is. But across the three spectrums of the, I would say, the areas that AI is being widely used, you have use cases today available in the market. It's actually across front office, you have back office, you have core products, you have other areas, but typically they're broadly categorized under your process efficiency, your controls, and your experience, which is customer facing. So some of the AI key trends is obviously rapid democratization. It has taken AI into the hands of everyone. So it's no longer something that is, out of reach for anyone. There is a lot of regulations coming in. So a lot of regulators who have started now to understand the need of AI and started coming up with regulations. Because why regulations? Because when it comes to AI, right, if you look at the other point, ethical and explainable, there is always a thin line that you have to draw between how much you can expose, how much you would like to ensure that you safeguard the privacy of the customers. Because before sharing data, because AI is all about the quality of your data. So to share your data, you need to have the consent of the customer. You need to also ensure that you share the data responsibly, and because otherwise you obviously are going to be penalized by the regulators as well. So AI is a double-edged sword, but then that's where the responsibility of the banks come in, and the reason why banks are trusted is because there has always been a trust with banks over the years in where I keep my money. So now I need to ensure you keep my data as well safe. So there's a lot of agentic AI, Gen AI, but there's one more thing is there's a lot of AI as a service. So you don't need to actually build this capability if you don't want to. There are companies that give you AI as a service. Partner with them, take the service, and ensure that you have your operations streamlined. How they can help? Like I said, there are channel interactions, customer serving, intelligent automation, risk management, data management. So you can have AI-enabled virtual agents. You have AI-enabled powered chatbot. You have voice banking. You have hyper-personalization. Then if you look at customer servicing, all about AI, which is all about how do you service a customer. Then all about automation, which is where there are a lot more use cases today. And it was earlier called RPA, then it became IPA, now it's called AI-driven process or transformation. Then all about risk management. That is where there will be a lot of focus, as I said earlier, that as much as possible, I want to reduce false positives. I want to increase the amount of control that I bring in without any slippage, so that banks don't get penalized with regulators. So there are a lot of focus on risk and compliance. And finally, data management, because you have a lot of data. You can always monetize the data, but how can you monetize? You need to ensure that the data is properly used, leveraged, and you get meaningful insights based on which you can monetize data, or you can extend your data to your customers in the way, in a very ethical way that you monetize data really, that your customers benefit from it as well, and you benefit as well. So there are a lot of use cases on AI that you can do from that perspective. And one of the key things from AI is the last part, right? Now, while you can talk all about analytics, classification, one of the key challenges banks was always facing data was data governance. Now, every bank has a data governance policy, process. They have a team that focuses on data, right, from data architects to data scientists to data engineers to data stewards. But data governance has always been a problem, and that is the reason every now and then banks end up cleaning data. Every year there's a sizable investment going in cleansing of data. Now, this is where AI is playing a major role in ensuring that your data governance is upheld. Now, if I have a very clear data governance put in place in terms of how my data has been architected and what is my master data and how my data is controlled and what is my master, what is my slave, where do I control my data, how my other transactions are used. Now, AI is playing a major role in ensuring that this whole data architecture is intact, so that you don't end up, messing up with your data and start ending up to cleanse the data every year. Because if that is not taken care of, right, the entire thing will fall flat. Because success of AI is what is the quality of your data? How much data you have? And what is the quality of the data? That doesn't happen when it's falling flat. So now what people have done is, okay, I was using AI for something else. AI was, for my AI, I needed the data. So let me focus on getting the data right. And that's what they're focusing AI from a data governance perspective. Now, if you look at from Kuwait perspective, see, there are certain things that has been done by Burgan Bank, Bobian Bank around this, KID around fraud prevention, around generative AI, then Gulf Bank around predictive analytics, then NBK around personalization, and Kuwait Finance also on back-end automation. So everyone is doing work around the areas of AI in Kuwait as well. So with that, I would like to conclude the presentation. Happy to take any questions. And the next panel, we will talk about specifically about payments and transaction banking. And then we have a specific panel on AI. And I hope there will be a lot more questions around AI for the panelists, which will come in, which will be panel number 3. Any questions? Okay. If there are no questions, then thank you for this. Thank you, everyone. We'll now take a quick coffee break, and then we will continue with panel number 2. It'll be a 10-minute coffee break, and then we should all get back and reassemble for the panel number 2. Thank you.
we will be having the second half of the discussions today would actually be involving two very interesting panels. The first panel is going to be moderated by Ramki and and the second panel is actually also going to be on AI, and we have a really interesting set of panelists. So without much ado, let me lower the floor and platform to Ramki.
Thank you, Ram. Let me introduce the panelists. Before that, just as Ram mentioned, this panel is all going to be about next-gen transaction banking and payments. So it will be a lot more driven around the corporate, and we will hear the view from business and from technologists, both on the bank side and from technology partners. So let me introduce the panel. To start with, I'd like to introduce Mr. Bassam. Bassam is the head of transaction banking at Budyal Bank. Bassam also is a very good, I won't say old friend, good friend, very young. He cycles a lot, and you can see his fitness, so he's of my age. Sometimes you need to keep yourself young, right? Or you will feel yourself young. Next, I would like to invite Himanshu Tiwari. Himanshu is the DGM IT for retail, wholesale, and digital at Gulf. Next, I would like to invite Rami Al-Tafri. He is the AGM of Digital Transformation at Kuwait Bank. While we have the bankers, no panelists complete without having a technology provider. And hence, I would like to welcome the Senior Product Manager from TCS, Subrata Bhattacharya. So let's start and let's start here, and I'll start with Bassam. It's all about transaction banking, and I'd like to start with you, Bassam. And so Bassam, obviously we were talking about customer at the forefront. So what do you think are the expectations from your corporate SME customers when it comes to transaction banking, and especially when transaction banking is undergoing a lot of digital transformation? So what expectations they have, and how do you think those expectations are being fulfilled by banks?
First of all, thank you for having me. It's a pretty interesting time for transaction banking these days. Expectations are accelerating, to say the least. Change is rapid, so is the expectations. And what's happening now, I think, not just due to technological advancements, requirements from the businesses, the marketplace. I think somebody mentioned the psychographics, or what happens when Gen Z comes in and whatever it is. So because historically 20 years ago or 10 years ago, a lot of the older generation were still at the helm of the organization. Slow was being a bit picked up slowly and surely. But now that the younger generations are getting into those C-level jobs, it's fast moving now. The expectations are moving and at a very fast pace. The first basic change that they're requiring is that the CFO himself, per se, or the treasurer, or the corporate controller, or the CEO itself himself, they use the banks with their consumer apps, right? And
and they have expectations for things to happen immediately and rapidly. And they take the same expectations for their corporate business. Why do I have to wait for a payment for 2 days to arrive? I need immediate payment. So that's what we call the consumerization of expectations, right? So this is now becoming the norm. The norm is that I need things and I need it quickly. This is the norm, first of all. This is changing a bit of the psychographics. Second is what they're seeing is the real-time payment and real-time services, right? I want to issue a payment today. Why doesn't it get paid today? It has to be a real-time payment. We see India, I think, leading the charge with real-time payments. And real-time payments sometimes take up to 10, 15 minutes, but sometimes they take less than a minute to reach. So we're looking into the needs for real-time payments in the local markets and obviously internationally. What's also being needed or requested is the personalization of the services. I want to be able to log into my portal or to my service, and I'm able to customize my dashboards. I want to see what's relevant for me. I want the services that are pertaining to my daily operations like I want it. Obviously, I'm looking for faster onboarding. It takes usually, it used to take days to onboard a client. We used to have a value proposition in sales. Oh, you sign today, you start tomorrow. And then they ask, if I sign today, why can't I start today? Why can't I self-onboard a service or a product or an experience? Experience is not relevant to corporate like in retail, but as a solution is more than the experience. Why, if I sign today, why can't I start today? Or a corporate client will come in, he's like, oh, Bassam, we just signed up for a big conference and I need to have my e-commerce payment gateway up and running in 3 days. What can we do? So these are some of the challenges and expectations that we have. Additionally, the personalization and the customizations. We need to have a solution that is as standard as possible, but as customizable as possible. So it's very common these days that we get requirements from our client, oh, this is my digital signature, this is my bylaws, but I want specifically for that beneficiary a different bylaw, a different payment set, a different. And this is becoming the norm. I have another company who's like, this is how I process payroll, but if a payroll file has certain names in it, it has to go to a different routing. So this personalization and customization is becoming, again, the norm in TB. Additionally, a major ask is, it's not a major ask, it's ongoing in the market. So I think the first host-to-host integration or ERP integration, when I was involved was in 2004, we did this in EUB and HSBC. Now with those ERPs becoming mainstream and accessible to a lot of medium to lower size companies, this need for integration is becoming more and more crucial. And when we say need for integration, we're not talking months to go live. We really need to, sign today, start tomorrow kind of a thing. So integration to ERPs or API banking or ERP banking is again becoming the norm. We used to, part of the good TD franchise is building the human capital. We used to make sure that our cash managers are certified, our trade people are certified, right? So we used to say, I'm a cash management advisor or a certified cash manager. I could work in your treasury to help you with this. This is the advisory role. We're moving from just, having those verticals with those advisory roles to, providing a complete type of a solution across TD. So there's also a need from the bank to move a little bit from product-centric to an overall solution-centric. This has also been a key changer in the TD offering from our side. Additionally, of course, there's the additional, and I'm going to say additionally, there's compliance and cybersecurity issues that we need to address. They have become laundry list, but I could argue that all these items that were mentioned are becoming laundry list. So, and this is part of the mindset shift. So we want things, we want it now. I think this is a generational thing that's kicking in on consumer banking and now following suit onto corporate banking.
So that's very interesting, Bassam. So you're saying that corporates usually used to take it slow, but now they are like, they want instantly.
and they don't want to wait, and they just are kind of following the trend that the consumer banking had undergone a few years back. Now, in that context, so we had the business view. Now, let's look at a tech view. So, Himanshu, so obviously, when the corporates are going to demand from the business in turn are going to demand from technology to ensure that you have the infrastructure in place to support these real-time scalable transactions, real-time transactions that happen seamlessly without any friction. So how do you think that these infrastructure elements that you are from a technology perspective play a key role, and how you will be in a position to support, especially support these, requirements that come from the business because of corporates to be fulfilled in days rather than forget weeks or months or years?
Yeah. Good morning, everyone. Thanks for having me here. So we recently went through a core transformation. So first, I'll start with that.
Sure.
So having a 24/7 platform that allows you to offer all services to your customer it gives you the freedom to go to the customer and say, yes, this is available with me, I can do this. My view personally is that banking or transaction banking as such is going to move from a banking service to a background service. So it is not the destination. It will be used as, I think Bassam was also highlighting, you would call embedded finance, as you said, or embedded banking or real-time integrated service. So that is what banks need to be ready with. We do get queries when new customers are being sourced for corporate. They do have requirements which come in that they would want to bank with you only if you could have the technical capabilities to be able to, for say, integrate with your ERP systems, payroll systems, HR systems. So once they onboard onto their systems, the employee accounts get created without the friction that happens so that they become more productive. So this is what probably banks need to be ready with. There's some other things, because we've been going through this transformation for the last 3 years, so that's fresh with us. Some things have to be embedded into the designs, how you build platforms. So cybersecurity is one. Zero downtime architecture is another. So you need to build for that, you need to design for that, you need to think that way. It should not be an afterthought. Proactive monitoring, observability, not only for technical components, but also for business APIs, business processes, business KPIs, so that you're able to detect anomalies faster, you're able to preempt issues. So I think it was highlighted one of the other ones, and I think you also highlighted. Customers would bank with you once they are confident that they will get the repeat, reliable, secure, and faster service every time. Corporate transactions are very high value, complex, and have a lot of stakes. So people wouldn't want to go into a transaction banking platform if they're not confident of what they are doing, how they're doing. So I think these are some things that are important. I think the future, if you're intelligent as a platform, and if you can automate, I think that would be the differentiator between different banks. So I think that is what one should strive to. But you build in those capabilities in terms of proactive monitoring, in terms of AI, ML, how do you route your payments, the fastest, cheapest route, how do you ensure that SLAs are missed, you can track the SLAs. So there are some things that are important for you to be able to satisfy today's corporate clients.
So just to take Himanshu's point forward with you, Rami, Himanshu was talking about how the entire customer-facing channels need to be aligned to the expectations of the corporates and business, because customers, like it was mentioned earlier, need that confidence to actually, log into the platform rather depending on the RMs, so that they know that the transaction will be fulfilled without any friction. But we all know that it's just not, when we talk about the example of a kitchen versus restaurant, right? In a restaurant,
you can have a very fancy restaurant, but if the kitchen is not able to service, obviously the customer experience is going to be not going to be that great. So when you're talking about channels, right, it's only what you have as the entire architecture that allows you to fulfill that particular requirement. You know, the architecture is well designed. You have a better orchestration, better services, better, I would say a front to back automation in place, and a a good core or a good back office solutions. So in that context, how do you think that, these core modernization, having this right core is going to help this whole journey? And how do you think that most of the banks in Kuwait are going through this transformation? Whether it is yourself, whether it is Bobian, whether it's ABK, with Gulf Bank had just completed. So a lot of, Barbas so a lot of these banks are going through transformation. So where do you think these transformations are going to benefit, and how do you think these transformations have to be looked at in order for you to meet these requirements of corporates?
First of all, thank you for having me here. Core modernization is one of the key pillars, I think, if you want to build a tomorrow banking. And you have to be ready from three aspects, I think, mostly. To have open banking as one of the things. Having enterprise API ready. So because most of the fintechs, they come to the banks, they want to integrate. So you have to be ready for them. Open banking is one below, but even you as a bank, you have to have this one. And you have to support also the standards. For example, one of the standards, ISO 222, which is it will score it like a swift killer, honestly, because it's more like a structured data for all the payments in general. Because it's swift like having a text file, but the ISO 222 is like having more rich data. It will reduce the reconciliation, fraud detection, all this kind of stuff. So this is one of the modern things that you need to adapt the standard, because everyone, they have to have modernized core across all the solutions. And using the AI is one of the key pillars also. So even you have to adapt for the AI and to be AI capable, because now everyone heard the term LLM, but let's be honest, LLM is just the same old concept. We just rename the product with a new changing name. So LLM is just like the machine learning large language model, what they call it. It's like ChatGPT, and imagine tomorrow you could attach any device to that LLM. Because currently if you use ChatGPT, you just try text with it, add the current, that's it. But imagine for tomorrow, you plug a USB on that LLM, what will happen? Imagine attaching a core banking on that LLM. So this is the future, what you see the bank. You have to be ready for that.
So taking that forward, Subrato, obviously, whenever there is a need for a transformation, banks do tend to turn towards the fintechs and the banking technology providers to help them in the transformation. So as a product manager with one of the leading banking technology providers, in your view, how do you think that you play that role? How do you think that as technology providers, you kind of not only drive these discussions, but also kind of shape up the discussions with some of these banks, so that they are kind of a step ahead of competition? And how do you think that you use the latest technologies like AI, especially, in automating or in driving these transaction banking, and especially on the payment side, transformations?
Fantastic. Thanks for having me. And very deep discussions indeed since morning. And it is enlightening to hear all experts here. So two parts to it, right? The question. What we bring to the table as a product organization is
kind of, the best practices done across the globe, right? For the markets that they have seen, that they has brought in those experiences within the product, that we share with our customers, and then they can take it forward in terms of their transformations. Because evolutions are happening globally, and that kind of global evolutions are brought into the product by us, and then, we disseminate them across to various customers. So that's what we try to do it from our product management perspective. Second, in terms of AI part, right? So at least not more than 30-40 times we have uttered the word AI since morning, and it's real. Okay. So from the perspective of AI, if you look at it, there are two parts to it, right? AI, which we knew before 2022, which was more predictive AI, and AI, which we know after 2022, which is more generative AI. The transformation capabilities that AI brings in is a combination of both of these, right? The predictive AI plus the generative AI. Now let's take the case of, let's say, the payments or the transaction banking use cases itself. So let's say, for example, when you're onboarding a customer, right? Retail onboarding is, I would say, easier compared to a business or a corporate banking. Business banking is still a bit easier than the large corporate banking, right? So these are quite different paradigms. How do you use AI to check on frauds or check on fraudulent documents being submitted, or the deepfake cases that are coming up? How do you handle them? Then let's say in the payments processing arena, there are a lot of repetitive tasks that happen, right? Exception handling, routing you talked about, right? So how does AI come into the picture, right? So we're solving those use cases. So the use cases are varied across, be it a trade finance to payments to, let's say we're talking about just-in-time liquidity, right? So Basam was talking about just-in-time liquidity. That's most important from an SME context perspective, right? Am I paid and when am I paid, right? He needs to know that. And how can AI come into bringing about efficiency and automation as well as risk management? So these are the two paradigms that are being talked about. Customer experience will naturally arrive, but using Gen AI and predictive AI for these two pillars, that is efficiency, automation, and risk management, are the key themes that are running forward.
So coming back to you, Bassam, I know you had given a very elaborate response earlier on the future of transaction banking or the expectations that clients have. But but banks can always integrate your transaction services with the treasury and lending and offer a full scale, full service, experience to clients. And there is also the way you integrate with the entire, journeys within that of the corporate, so that the entire banking experience is very seamless, not at the end point, but through the journey that even the corporates go through. So how do you think that banks can better do that, and where do you think that things are lagging, or how do you think that it can be taken forward in the future so that the relationship is much broader when it comes to banks, and not that with corporates, and not that every corporates tend to you can't do it with multi-banking of corporates, but instead of going to each corporate with siloed products, you sort of tackle it.
So historically, like I always go back, and you made me sound young, but I'm not that young. But historically, there were always two notions of banks: the transaction bank and your lending banks, right? And from a transaction banking perspective, we want it to be, we want to be the best transaction bank, because the lending bank should be only the cheapest, right? But now with the expectations evolving, corporates are looking for a bank, for a lending bank or a lending partner that's also, immediate to respond to his operations, can
can immediately draw down his facility, can look into those credit processes much faster. And like you said, it's not now product verticals anymore. It's journeys and customer experiences. So the verticals are slowly, this concept of corporate lending bank and transaction bank are kind of merging together with this whole journey approach. So first of all, some things are lagging behind, but it's work in progress. A couple of examples that we have done. So 2 years ago in Bubiyan, if you want to issue an LC, you go to a separate trade portal or a supply chain to a different portal, or if you're issuing payments to a third portal. So one of the basic stuff that you had to do is, have a one-stop shop for all your commercial needs. So initially we're going to say we have one-stop shop for all your transaction banking needs, but soon enough we're going to start saying we have a one-stop shop for all your banking needs. And also rightfully, corporates will not, restrict themselves to a single bank for risk purposes, credit facility purposes. But you want to be that bank to grab the biggest share of wallet. And once you fill those checks and those ticks across those products and solutions, you will be able to do that. So now we have a single sign-on for everything Bubiyan. And then we say we have a single sign-on for all your bank accounts. So while open banking is not yet regulated, we do the old-fashioned third-party bank balances reporting via MT940. So we say Bubiyan is your portal to your banking needs. We do that. This is at the basic level. We start drilling down more and more. So when you're offering supply chain finance to your clients or trade solutions to your client, you're able to see those invoices and you're letting your clients, discount them or factor them or whatever he wants to do with them immediately on the go. But obviously immediately on the go, we just put a small disclaimer with still a few papers that he needs to sign and upload and do that because of regulatory issues. So obviously. This is on the lending side. Yesterday I was attending the Dubai FinTech Summit. We saw a very nice solution that could be white labeled, is that an SME at this stage can upload financial statements, bank statements, give electronic approval for the credit bureau. All this data can be fetched. A credit report can be generated within 5 minutes at almost 99% accuracy, that what usually an RM would take 5 days to do. So imagine if we have this type of solution embedded part of the same portal that's offering you all the nice, glitzy, beautiful TB solutions and also access to your credit facility. All these things are happening as we speak. I mean, this is not, this is actually the current scenario. Additionally, we're helping clients with their, so some fintechs or some TMS and ERPs, they make the bank agnostic, but not all the clients have access to them. So we offer some type of solutions that, we're not a full TMS, we're a bank, but I help you manage your liquidity as if I'm a TMS. So besides then making your bank balances appear, we set up automated digital liquidity solution for you. We optimize your yields on your excess balances locally and internationally. And all this, again, in a single place with a single platform integrated immediately with you. Obviously, with those, there will be, the big wave that's coming is the APIs that's going to be going crazy, and I think we'll address it in the last phase. But all these things are making, the more the bank is able to blur the lines between the transaction bank, the more it will be successful in developing these journeys across the board. And we're doing this work in progress. So there are some lags, of course, but this is work in progress. And it's coming quicker than we want to say.
Just take that forward, Bassam, just a quick thought on this as well. Now, while you talked about the integration between lending, per se, and transaction banking, but when it comes to business banking, there is a lot more on beyond banking as well, right? You don't say just banking. You are trying to provide value-added services beyond banking by creating an ecosystem, SME cockpit, which again, in most banks are driven by transaction banking because SMEs by default want their working capital to be met, working capital needs to be met, and just-in-time liquidity, as you talked about, for SMEs. So what in your view is banks' role with these beyond banking services that you want to, that SMEs are looking forward to, and how banks can play a role in it?
Well, first of all, in terms of, if we're talking SMEs, we're looking at immediate facility to be given against their merchant acquiring business. That's nothing new here in it. It's just how you deploy this. And again, some of the services are becoming commoditized. It's the process of providing the services. It's the quickness of onboarding and deploying these capabilities that will make it the difference. So that's one. In terms of SMEs, we're also looking into this factoring and reverse factoring, where a full digital platform that we provide as well can enable their working capital immediately in a fully digitized solution. So a client can issue an invoice, his payee can accept it, he can request the bank to discount it, and immediately the drawdown is happening. Obviously, this is coming after currently a lengthy process of credit review. But once the credit limits are there, this whole seamless process is available. So that's one example. We're also availing in the business banking, we're also availing kind of a marketplace where we allow clients interacting with each other, enabling payments faster, incentivizing them to transact with them. And that's some of the things that we're doing currently.
So, Himanshu, now that a lot of things that is happening on the corporate side when it comes to digitization, there are also scenarios where the push for digitization also comes from the tech side as well, right? Because as we said, today CIO has a table, a seat in the strategy table, right? So how do you see the role of technology, CIOs and technology, in pushing these digitization for transaction banking and getting IT ready in order to fulfill some of these requirements that Bassam was just alluding to at the moment?
See, few years back, we used to say banks need to convert into technology companies to survive. So today, CIOs need to not be only technology heads. I think need to be business shapers. So today, corporate banking partnering decisions are not purely being based on the pricing, your traditional relationship with the customer, the limits that you give them. They're also being based on the technical maturity of an organization. How good and how technically an organization or bank can support a corporate. We've been seeing cases where corporates agree to onboard with us after due diligence of our technical capabilities. So it has become more like an RFP process, wherein once they've agreed on the pricing and all that, they also give us a requirement document saying subject to these technical requirements met, we will decide to bank with you guys. It could be saying, can I see my liquidity position real time? Can I do my payment processing as a backend process from my ERP systems without? So the need is coming that more and more host-to-host integrations, technical integrations without actually doing banking. Banking as a background service is what is it. So CIOs now are not only managing infrastructure and technology, they are also being part of the customer acquisition process. We have cases where technology teams have to be part of that team that gives the value proposition to the corporate customer, saying business-wise, this is what we can offer, but technology-wise, this is what we'll offer. It could be not only a technology service, but it could be advisory service and technology. People are wanting to onboard onto Swift, for example. Now, people do not have, as corporates, this expertise there, so they need their bank, who are native users of this technology, to be able to help them to move around these services. So that is where now both the CIO and the technology teams, because their actions today have a direct impact on the client experience, the revenue, and also your acquisition. So they need to have a bigger say on that table, and they need to be part of that business, whether it's your product teams, your sales teams, your business teams, to be able to showcase the value proposition that as technology teams we bring in, so that the experience of the end customer becomes better, and they're more comfortable banking with you rather than, I think there was one conversation saying you don't get tied to an RM, you get tied to a bank because of the value proposition that it brings in. So that is where I think CI has a bigger role to play now.
Now, just to take that forward, Rami, CIOs are facing increasing, demand to integrate tech stacks because of the way the entire integration is happening within these banks. Now, how do you think that banks in Kuwait can actually future-proof their transaction banking tech stack to ensure scalability, flexibility, and but without compromising on security, and especially with a lot of these, happening, a lot of these day-to-day evolution that is happening around payments, in across the region and specifically in the market.
See, having a future-ready stack is something you have to work a longer plan. It's not something out of the box. You have it. The vendor or partners, they will help on that one. But modernizing that, it requires your core to be like more modular, composable, at the same time cloud ready. So this three key things, I think this will uplift the banking into different levels. So in the future, the bank will have only two options, either to be a coreless, using bank as a service, or will be the host, like banking as a service. I think this is the direction most of the bank will have to be ready. We have to path either to choose this one or this one. This is what I think from my point of view. So,
sure. So, coming to you, Subrato. So, as a tech partner, right? How do you support the bank in this journey? Because you heard bankers saying that there is an increasing need from business, corporates, which business have to meet, for which IT has to support, and even IT has to be forward-looking as well. So, what do you think? I mean, how do you, as tech vendors, will be able to support the banks in this endeavor? And you also mentioned at the start of your discussion earlier that you bring those global perspective to the table. So, obviously, based on your global perspective, there are certain trends that you would have seen around the transaction banking, around payments, around the way this whole integration is happening, and how SMEs are actually being catered to, right? So, what is that? How do you support in the journey, and where do you think that you will be able to provide that advice, which will help the banks, especially in Kuwait, to bridge that gap?
Thanks. So, see, when you say transaction banking as a segment, within that, I would qualify it into two parts: the small business and the large corporates, and they are quite different in terms of the needs. Right? Things that are evolving and disruptive or disrupting across geographies is the small business banking, right? And they are, as your first presentation as well today morning when Ram was giving a perspective on Kuwait and the GDP, the SMEs contribute 22%, if I recollect, to the overall GDP from that perspective. Banks in Kuwait need to support the SMEs, right? How do you support them? It's basically coming to Bassam's view as well. Allow them to do their business, right? Enable them to do their business. Integrate the bank into the value chain of the business, right? Right from his buying of inventory to selling his goods, the entire value chain should be supported by a framework which is provided by a bank. So bank is invisible behind him, supporting him in his entire business journey, right? That is one. And globally, if you see, currently there are three themes that are working in this segment. Number one is real-time payments. Okay, the amount of disruption that is causing in that, when I say disruption, it is obviously for the better. Right? So the real-time payments, the way it is disrupting markets, like for example in India or elsewhere as well, or Brazil, for example, or faster payments in UK, the amount of benefit that it gets onto the SMEs, availability of cash, liquidity at that point of time, that is a game changer. Okay, so WMD has been introduced 2024. Technology is provided by KNet. Now it is for the banks to start looking at the value-added services on top of it, primarily targeting the SMEs or the large corporates. Right? How do you make it enabled? For example, I can just have an invoicing solution on my app, or my mobile app, or my internet banking, where I do my business, collect money from the, the customer. Can I do that use case? Right? So these are things one can look at in real-time payments. Second is open banking, right? Open banking, when we read about open banking, this is my personal view, but essentially open banking with a capital O and a capital B is restrictive. When I say that, that's a noun that is driven by the regulation, which the central bank or the regulator brings in. What my take is, an open banking with a small o and a small b, which is a verb. Open your banking. Right? So when you open that banking from that perspective, then it becomes, the ecosystem play comes into place. Right?
So just one final question, 10 seconds from each of you. What is the most significant or impactful innovation that you see in 5 years where you put your money into? But some 10 seconds. Sorry. What is the single most significant innovation around transaction banking payments you see the next 5 years where you put your money into?
I would say single split in 3 parts. AI, real-time payments, embedded finance, and embedded contextual banking.
Yes, I think banking as a service. So retail, you've seen the disruption. Now there's no need for you to log into your banking app or to take out your card. I think that is where transaction banking also needs to go, where it is embedded into the process of the customer, the corporate.
AI, definitely. Second thing, I think buy now, pay later, because it's going crazy. Imagine like invest 100 million, you get like 40% of that number, 10% loss, 5% operation cost, you still have 25, which is, if you go to real estate, 6 to 12%. Any other funds or investment is less than 20. So I think that's it.
My take is CBDC, primarily because of the programmability, not because of the transfer of money. You can build your contracts, transaction contracts inside that money. Do it for a purpose. That's my technology for the next 5 years in transaction banking space.
Thank you. Any questions for the 4 gentlemen here? Otherwise, they are here. You can always meet them in person and ask any questions. And with that, I would like to conclude the panel 2. And thanks, gentlemen, for being part of the panel. Thank you.
So we have to take some action now. We have been talking since morning about AI. Let's take some action on AI. First of all, we'll talk about what is AI in action in Kuwait market. Maybe somebody wants to take a guess. I know there are 10 different countries or nationalities available in the room. Somebody wants to take a guess. What is AI in action in Kuwait? I'll start with some of the examples. So Kuwait government has signed with Microsoft to set up AI COE, AI Center of Excellence, where it will help transform all the government employees in Kuwait to uplift them towards AI and see how AI can benefit in terms of day-to-day job for them. Second action for AI again in Kuwait, Ministry of Education has announced AI to be mandatory as part of curriculum from grade 10 onwards. Few more actions. Has anyone heard about FEDA, FEDHA? So we have been talking about whether AI is going to take our jobs or not. Any guesses? So FEDA is the first AI-generated news reporter in Kuwait. And then we say whether AI is going to take our jobs or not. This is one example where AI is taking our jobs. And you may find it. So it's Kuwait news being broadcasted or reported by FEDA as an AI agent. With this, ladies and gentlemen, I welcome my first analyst on stage, please. Farida Anani. Farida is the Executive Manager, Emerging Technologies at World Bank. She's also the founder and CEO for Smart Globe, doing a lot into IoT. Welcome, Farida, on stage. I'll welcome my next panelist, Salman Molayan. Salman is Senior Vice President, Digitization and Analytics at Markaz. He's a wealth tech SME. If people want to reach out to him, how to grow your wealth, please reach out to him. He's around. Next, I'll welcome Arun Nati. So Arun is the VP. We have another Vice President. Arun is the VP from Photonic Solutions. He helps bank towards AI transformation. Welcome all the panelists on stage, please. So we have been talking about AI since morning, and this panelist will focus more about how the AI is creating an action into different organizations. We'll talk about bank, we'll talk about something around wealth, and how the tech is going to transform. With this, I'll start, Farida, from you. Ramki gave a beautiful presentation about emerging technologies, and you head as emerging technologies in Varma Bank. So just give like a quick snapshot of what, according to you, is emerging technologies, and then you give a perspective how emerging technologies are helping to transform the customer perspective towards digital. You start with you, please.
Okay. Thank you all for attending such lovely event. This is the first time that I'm attending with you. It's my honor always. Actually, I'll start or grab the start point from one of our valuable speakers. Is a technology is enabler or a driving factor? Actually, I respect both theories because it's both true. Yes, we need to start everything from the customer expectations, and the technology at the end, it's enabling us to achieve such target. But also, we need to understand that sometimes the technology pushing the customer to think beyond the expectation. Now the journey, it's not only the expectations. The journey is a prediction of the future. The journey is coming from the first perspective or pillar related to the AI, which is the target. What is our target actually when we are serving or offering the banking services? The target, which is generation. If we will compare the banking industry, for example, with the mobile industry. The mobile industry, you will find a roadmap and white papers and designs and testing, not only for alpha and beta generation, but even beyond them. In banking sector, always we are behind generation like 1 or 2. So we are working -2. If we will analyze most of the activities related to AI in the banking industry, not only in Kuwait, nor in GCC, even worldwide, you will find most of these activities starting millennium generation, not even Gen Z. Gen Z needs a lot of other activities and things and perspective. That's why we will move to the other aspect related to AI, which is the behavior of the AI. In the behavior of the AI, you will find a lot of things. Most of people, while we are talking with the public or the normal customer, they are thinking that the AI is a type of machine learning. Yes, you cannot deny that the machine learning is a sub-branch of the AI. But it's only limited to the learning aspects. There is no reasoning. There is no problem solving. There is no actions. The journey beyond the learning is to provide a solution. When I wake up morning, I'll find my bank sending for me, good morning, today you have 1,000 KD and you have opportunity to be invested overnight to take a 10 KD more in your pockets. I'll bring it to you. It's granted. You can imagine that. But as a reactive one, waiting for me to take an action, and at the end you are telling me, see Farida, I can analyze your behavior in your lifestyle. Almost every month you are sending money to XYZ. So I'll send this month, yes or no? Yes, send. This is not the end of the AI. The AI needs to be even expecting the behavior of the new generation. What is their expectation? Is it bound to a mobile device? Definitely not. It will be extended to IoT. It will be extended to even sensors. Sometimes they are thinking that it's idiot idea, but maybe we will reach it as a chip built in our body, can take all the sensor and sentinel factors, providing behavior, changing my money, changing my investment, changing my career while I'm sleeping. This is the AI. But the point that is the AI is a replacement to human? Definitely not. It's a tool helping human to enjoy their life, to achieve their targets, to receive more appreciation, to get a great journey in their day. So this is the AI. If we will analyze it from the behavior from AI, we will find machine learning, we will find the genetic algorithms, we will find neural algorithms, we will find conjunctive computing, you'll find a lot of things and a lot of tools. But from a target-wise, you can divide it between 3 different layers. One targeting directly the customer journey, and the second, it's called indirect or a cold role, and the third is shared behavior between the customer and the bank or the financial institutions. From a direct behavior with the customer journey, including behavior biometric, it's not anymore that put your face and I recognize your identity. No, I can even go beyond that. You are today, Farida, you are absent. You are not happy. I'll make you happy in certain way. This is the AI, how can behave. There's extension in the journey of the customer itself. And this is one of the things that I even introduced in a couple of papers in relation to delighting your customer. You are not delivering a service, you are delighting your customer. Your customer needs a customized and personalized journey per second, not per day, not per location. You are not thinking about the smart GPS that tracking where are you, and based on your position or location, you are in a work, I'll provide for you XYZ services. You are at home relaxing and watching movie, I'll provide for you a different journey. No, even per second, you can change the behavior and journey of the customer. I know and I can predict what is your need after 1 hour, 1 day, 1 month. I can predict based on your status if you are a single or a father or a mother looking after kids, small kids or adult one. So all of these, they are the use of the AI. It's one of the definition of the AI that I actually love it. It's a universe. It's our life. It's just a tool to simulate and mimic the actual human behavior and intelligence, but in a very high optimized behavior, an efficient one, helping us to enjoy our life.
Great. So direct, indirect, shared responsibility. And Sabah, I'll just pick a point from what Farida said. AI is not going to replace our jobs. Okay. But I shared one example where AI may replace some potential jobs. But we have a similar challenge in the wealth management as well. Instead of going to the wealth managers, people started going to AI. AI, please help me. How do I diverse my portfolio? Okay. Now, what do you see as a wealth manager? The challenges in your space due to AI, and the perspective between human intuition and the machine intelligence, the balance between these two. Just share your perspective in terms of how AI is going to transform the life of the wealth managers.
Perfect. Hi everyone. Thank you, Ms. Farida. I think she's spot on. I agree. AI will never replace humans, specifically in wealth management. You know, we work in an industry that's very personalized. People will always need this red carpet kind of treatment. They always want that phone call. They always want you to follow up with them on the portfolio, what's happening, what's the new product. And I think machines will not be able to do that. Regardless of how AI develops, I don't think it will replace what wealth manager needs. But where AI comes in the picture is where it enhances the productivity, right? So, as you said, the reports, think of the client journey, right? From onboarding to maintenance, all this journey has been optimized with AI, right? You don't have to go through all this paperwork. It used to take weeks, now it's taking, like, you can say days. I'll give you an example. At Markaz, we're working on upgrading our system, an AI-friendly one. So the RM can simply talk to the chatbot. I'm meeting today customer X. Give me a brief about his position. He's invested in equities, invested in real estate. He has an upcoming corporate action coming. You know, he's really empowered to meet that client, right? So if you think in a way, AI has leveraged these day-to-day kind of tasks and gave more time for the RM to focus on things that the machine cannot do. They can build relations, think of strategic guidance, help him in advising on complex financial issues, right? And this is where we want the RM to be. This is where we want the wealth manager to focus on. Right? So that's where the AI helped. Yeah, I totally agree. It's looking at replacing humans, and it will never do. Now, it's a very interesting debate on human versus machines. What will happen? I think we should say it's humans and machines. You can have machines do the analytical engineer, and where humans are used for the emotional intelligence, for the judgment, that I think machines are not yet there. I was listening to an interesting podcast the other day on a new concept called AGI, Artificial General Intelligence, where AI starts solving problems. And we're very far at reaching that level. So I think till that time comes, we have to think of humans and machines, and companies that adopt this hybrid approach will be the differentiator, of course.
Great. Thank you. Thank you so much, Salman. Arun, coming over to you. These days, AI is plugged into, you say core banking, you say transaction banking, you say wealth solution. AI is embedded into all the key products available in the market. Now there is an ambition and there is an execution piece. According to you, what do you see the key gap between what an organization wishes to achieve through AI and what is the execution perspective on ground?
Right. Firstly, thank you. Thanks for having me here, and greetings to this august audience. Somebody, a group that is doing a lot and kind of transforming the space. And AI, through the day we've been hearing about AI. We've heard Ramki's presentation where there was a lot of focus on compartmentalizing where AI is getting in, or where are these specific areas where AI is coming in. So when it comes to the gap, I would say it's the last mile. Okay? The last mile that is not yet covered. How many of these AI concepts have moved from a pilot phase to the production phase? How many are still in the labs or the sandbox, which have actually not gotten to the production phase, and somebody is actually getting something out of it? Is there a tangible benefit that is coming out of an AI concept that was brought in by a particular team or a particular leader into the function? How many of them got stagnated from the proof of concept and never really transitioned into the production phase? So here, I would say, firstly, are your concepts that you brought out really integrated into the business teams? Okay. On one side, you can come out with a great fraud detection engine. Okay, and as a concept, it really works. You've shown this and proven this on a sandbox. But at the same time, have you been able to integrate this into your transaction engine or into your alert management engine? Has that integration been successful? And have you scaled it? You started off, but it has not just gone to the next level. So there is a clear gap, and I would say it is about the isolation that is being created, and where we lack that integration capability. Secondly, ownership and trust. On one side, as a technology company, we do have a lot of discussions where, at some point in time, today we can't have a banking business level discussion without at least one mention of AI, Gen AI, where it is going to come in and all of that. And there is a good buy-in that we get. There is a proper buy-in that we get, and we have asked to, move it to the next stage. And when we move it to the next stage, there are multiple layers of trust gap that is coming in. Firstly, within the business teams, as that gentleman or the lady there, have they bought into this particular concept? Have I been able to show him that, by adopting this particular AI-based solution, can I get this dollar difference tomorrow? Can I clearly say from a 1 hour job, it has come down to a 5 minute job? And has this been communicated? And have you gained the trust of that one particular business leader out there who, end of the day, his sole bread and butter is about, the day-to-day work that has to happen. And he has to, by the end of the day, he has to have a set of reports that are ready and has to have a certain balance sheet that he has to show. So have you reached that point there? That's the question. Have you gained the internal trust, first and foremost? Then secondly, the trust from the outside world. We heard about Ramki's session,
where he told about there is this, today it is easier to, or rather there is even the older generation, the generation with the grace who are actually looking at digitization and AI and so on. Are we getting the trust from that group of people? That group of people are probably the easiest to target because they have had the experience of the worst side of banking during their initial days on their first loan application or their first home loan or a car loan or any of that. So that is that group who have actually gone through the troubles of the traditional banking, going into a branch and so on. So it is that group that would immediately understand, yes, I need this. But that group also understands the worries about data. They always have these question marks that are going, is this data, is it safe to give out my data? And we are learning and all the frauds that are coming outside or that are being highlighted by governments or the warning messages that come. It all keeps talking about, okay, you still don't trust it. The trust gap is coming big time. So as when you want to roll it down across organization through all your customers from a banking perspective, so will there be a backlash? Is there a proven case where something wrong has happened and will this come back and hold the sword up our head? So that is always going to come back. Then finally, I feel there is some level of talent gap as well. Right? So, okay, data has been always there with the banks. And over the last 10 to 12 years, there have been data scientists who are present at the banks. And now we're starting to think AI. Do we have the right AI translators with you? Okay, how exactly that data that is sitting there can be translated and you can bring it to a business language. That translation, somewhere there is this gap. So that's where sometimes probably we as a technology company come into play there, where we are now working closely with some of the banks there. We are kind of co-working. Let us bring out composable AI, I would not say AI solutions, I would say AI capabilities. Bring it along with the bank's team. Embed it within the bank's, general functioning. And that's where we start seeing the value coming out. So I would say, just to summarize, initially it is the problem with the integrations. Secondly, it is with, the ownership and trust. And thirdly, it is the talent gap that's somewhere glaringly coming out.
So trust, I'll pick this thought of the trust, Salman, and in your side of a business, the trust plays another important element and to the next level. Now, if you have to pick the trust and the ethical use of the AI, where AI has been more predictive and more personalized. So what do you see the wealth manager ensure there is enough trust available in the wealth management when you have AI around, which is again giving you more predictive or more personalized experience. So your thoughts on that?
Yeah. So if you think of AI and wealth management, so let's think of, let's say, use cases. So it gives you asset allocation, right? So it takes your risk profile, your client profile. Based on that, it tell you, okay, you have to invest 40% in equities, 60% fixed income, just as an example. Within equities, you have to go into S&P 500 ETF, and it will execute those transactions, right? So as a wealth manager, you have to be able to explain what the AI does. Otherwise, you will lose the client's trust. You lose the client's, belief in you. At the end, we are not selling performance to the client. He comes to Markaz or X or Y, any company. He comes for the experience you have. He comes for the judgment you have on the products, on the market, and he comes for the legacy that you sell him, right? That's the start. That's your value proposition. AI, as also Ms. Friday said before, it's a tool, right? It will help you give all these allocations and execution, but there's your part that has to come to explain what AI does. Right? That's a very critical part, is that explaining the AI model. When it comes to trust, this industry is all about trust. So if you don't have trust, you simply lose the client. You have to invest in governance, probably adopt international data frameworks. Don't take AI outputs for granted. When you use ChatGPT, you have this famous response. This is an AI generated output. You have always to question this output, and they don't take it for granted as of now. There are many hallucinations. You cannot take that for granted.
And if you ask too many questions, says server is busy.
Exactly, right? It cannot handle that much. So you have to be very careful, especially when it's wealth, it's people's money. even an extra care that you have to take as any other industry.
Great. With this, for example, agent AI or agentic AI is another buzzword in the industry. And it's expected to design your entire flows complete end to end. And with this, Farid, I want to take your perspective. How is agentic AI or AI agents helping or creating an impact on the banking ecosystem?
When you are asking me this question, I do remember one of the movies where the robot gets the control on the world. It's similar to it. Agentic, it's like you are building your agency for autonomy of any process that you can imagine. Either it's fully or semi. The simple example out of it, a customer onboarding. Most of the banks currently, they are automating this service and know your client in a very simple manner. But do you think that this is the end of the story? Definitely not. Because the end of the story cannot be reshaped definitely now, but you can imagine it. Let us imagine something called a digital identity, commonly recognized worldwide, maintaining all the characteristics of the person, everything. Your origination, your health, your information, your employment, your citizenship, everything. And can be shared under a specific security levels between governments and public sector as well as the private. You are living in Kuwait, I need mortgage in Canada or UK or States, sitting at my home and applying and getting it immediately. This is how can we utilize the AI in future. AI, like anything, has pros and cons. A lot of benefits, ready, speedy, fast, precise, accurate, everything you can name it. But also can be manipulated, can be penetrated, can be hacked, can be misused. I can build the AI with a biased data where I can reach the decisions that I want, or a specific government or a specific lobby wants. So also the cybersecurity part, compliance part, a lot of initiatives can stuck with compliance and the regulatory requirements that is still adopting not a fashioned technology or cannot understand the fashioned technology behavior. Still there is pros and cons. Even the part of the human fears of a replacement. I do recall one of the experience that while we are revamping a solution, the first hit came from the people themselves. When you are sitting with them, you are telling them, wow, we have a cloud, we have ecosystem, we have smart, we have AI, we have explainable AI, we will provide for you tools. Wow, it's very good. You just implement. The first moment that you will start to implement and analyze the process, it will be automated, this is not automated. Oh my God, you will take my position? You will take my job? I'll be jobless? No, I don't want this solution at all. And starting defending his position and make a resistance on the change and sometimes challenges and obstacles in front of you not to adopt such technology. This is the normal behavior. But at the end, it will be implemented or not? Yes, it will be implemented. By hook or crook, it will be implemented. Because as Salman explained, there are a lot of areas of innovation and creativity cannot be simulated by computer. Cannot, by AI. Still the human factor, this is the make of God. We cannot replace. We can simulate, but we cannot replace.
So interesting. You also raised the important point. It can be manipulated. AI can be manipulated. I mean, we saw some examples. For example, particular, let's say, ChatGPT or a AI tool. From wherever it is generated, let's say, particular country, you ask about anything about the politics in that country, it won't reveal you anything about it, but it will reveal you about the neighbor.
Yes.
Same thing, if somebody has floated a AI, you ask about any flaws about that company, it won't reveal any flaws about that company. It may reveal about all other companies. So it's so much of manipulation around. So it should not be blindly trusted, although AI is available. And again, always that human judgment has to be there. With this, Arun, just pick your thoughts on how do you scale AI across, or how do you recommend banks or organizations to scale AI across different functions? As you said, there are challenges. Integration may be another challenge. So what is your thought on right way or right approach to scale AI?
One word, governed. Okay. Governed scaling should be the approach as we look at making it grand, right? So again, here, where does it start from? It starts at the drawing board. Right when you made your strategy, you list out, okay, which are those areas that you want to actually start implementing. You can actually get to, like Farida was mentioning, there are a lot of capabilities out there. There are, Gen AI can get plugged into multiple pieces of your practice. But do you want to bring it into every other practice of yours? Or do you want to bring it into practices that matter? Practices where there can be a practical benefit that is coming outside. So the initial compartmentalization to say, okay, I would use Gen AI when it comes to an interaction mode, or an agentic AI when it is a customer experience. I will use a traditional AI when it is coming to the fraud detection side of the world. And I would use the RPA control when it comes to the process side of the world. This one. So how well have you broken down your requirements, and then you start building capabilities. And don't start building solutions, build capabilities. If just to take an example, as an onboarding process, okay. So you have multiple levels of onboarding that are happening. Right from a credit card customer to a loan dispersal, or to a savings account, or to a corporate account, retail, corporate. There are multiple levels of onboarding. So if I build an AI-driven onboarding capability, and now I can scale it across departments, make those changes. Okay, for a credit card customer, what are those tweaks that are required here? Then for the retail customer, what are the tweaks? For the corporate, what is it? For a very large SME or a very large corporate, what is the tweak that is required? Then you start scaling horizontally. So again, you come into a controlled environment there. And finally, like explainable AI has been one of the points that came up at multiple stages, right? So it is again part of how the trust part of it is also going to be built. Let's say a customer came into my bank and he filled out, or rather he gave his details, documents were uploaded, etc. And the message was rejected. What as an output the customer got was, it said, your loan is rejected. Now, the AI engine should be in such a way that it can be able to explain why that rejection happened. Well, let's say there are 5 different factors that were put into reaching a rejection clause. Have you percentagized that whole thing? He was rejected for his score, credit score. Let's say 15% of the rejection reason is the credit score. Then, his geographical presence was one reason. His job, like the trend of job changing, or between periods where he didn't have a job. So his financial history was a problem. So are we giving that explainability also coming in here, so that the auditability comes in? This not just for a customer loan rejection scenario, be it a regulatory report or a regulatory question that is being answered. Can you use AI, or I should be able to use AI to actually give an explanation as well?
So AI is even telling you, if before you go to the bank, AI can tell you based on your profile which bank is going to give you the loan first. Yeah, so this is another example. So before I go to my last question, I'll just open it for audience if there is any questions from the audience. Yeah.
I think I have this is actually going back to Salman's earlier point, right? I mean, you were talking about ultimately it's the experience the customer comes to a wealth manager for, and it's about your mind, your brains, your choice of product, and that's what it is, right? Is that statement, and I'm just extending this statement to the morning discussion that we had when there was a comment about no perfect customer, and every customer is different, and there are different segments, and there are different audiences you got to cater to, and there are different services, products, experiences you're providing. So is there a possibility, and do you visualize a situation where because of AI, you actually there are new target customer segments that are getting created, different from the ones that you may be dealing with today, who actually are quote unquote the customers, wealth customers, which are driven entirely based on the AI, technology and platform?
Yeah, Rama, I totally agree. This is the case that's valid today, but at the end, this wealth will be transferred to their kids, which really don't want to talk to you, right? They want to talk to an application, and that's where AI becomes a differentiator. If you haven't done your job, you haven't done your homework, you haven't built your infrastructure for that generation, you're out of the game. So I totally agree. That statement I said might be valid today, but you have to prepare yourself to talk the language of the next generation, which wants a mobile application, automatic rebalancing, execution, and not even to talk to an RM. I fully agree.
Yeah, there's another question at the back. Please keep the mic.
Hey, hi. Just one point, because we all are talking on the AI. While
if you can introduce yourself.
Hey, sorry. Myself, Saurabh Singh. I head the global sales for Yeti Consulting. We are into QA business. Just one point is, while I believe, Arun, you have highlighted that there are different forms of AI, maybe the Gen AI, traditional AI, and the RPA that is more for your process-based automation in production. While the AI is coming, that all we are vouching for, is there any kind of data threat or a data issues also out there? And can we also look at a data obfuscation as one of the ways to prevent the data issues during the AI part? So that's one piece, that if we can touch upon that as well.
So your question is to whom? You want?
So yeah, I'll just just quick. Yes, data definitely plays a major role here, and the entire concept of your AI is sitting on your data marts or data lakes or whatever. Okay, so and how you navigate that and how much you can give it assurance to the other side that your data is safe. How you can actually demonstrate that safety element here. Saying that while we are using Gen AI on one side, how you are localizing your own, building your own LLMs for that matter, and this data that you are gathering from your customer is not stored or presented to a larger audience or or to an audience who should not have access to it. So that level of demonstrations become very important while you build your language models or your own data lakes, and how much localization you're able to bring in there.
Maybe Farid, you want to share from a banking perspective of this?
Actually, I'll add to our point the matter of data quality. Yes, the security and data privacy is one of the common risks associated to AI, but also the data quality to ensure that such data is complete, comprehensive, and unbiased. As you have provided the example about whoever is providing or feeding the data to the AI engine itself or the solution, mainly is biased towards specific topic or specific directions. So all the decisions would come at the end from such a perspective. Actually, I read an article in relation to one of the cases related to that. It's analyzing the part of robo-investment. The robo-investment, it's a dilemma, actually. It started with a robo-advisor where somebody is collecting the data like structured, unstructured, putting a behavior about a specific market or a specific share and providing for you the advice whether to go or not to go. But at the end, the decision, it's the customer. May I rely on it, may not. But ended the story with an automated part, the agent. The automated part was a different story. The automated part is they discovered that the big data is built intentionally to collect the depths of the data from specific sources targeting specific investments. And this is a case happened, proven, in one of largest and reputable companies offering the automated investment. Such behavior will provide for us the same comment that you have started with. At the end, we need a human to select. We need a human to design. You will need a human to validate. And we need a human to take a decision whether we will go with this solution or that solution. We can automate definitely the investment behavior and risk management. There is no harm about it. But to automate it from the perspective, not out of the box solution, for a customized solution, targeting our customer, targeting our segment, targeting our services, targeting our ethics, targeting our values, targeting our community, targeting our regulatory requirements. So there is no need for out-of-the-box approach for a critical solutions like that.
Thank you so much. With this, we'll conclude. I know we are sitting between us and the lunch. And wonderful discussion. Thank you so much.
Thank you. Thanks.
All the speakers of the day who are women, we can request them to come on stage. We could have a group picture together. Himanshu, Surajit. I think we can take anybody else outside. Okay, so I know we just are a few seconds away from the lunch. Just a few closing remarks. I'll use the mic. So, firstly, thank you, ladies and gentlemen, for being with us through this, very interesting day. I know we had some very fascinating conversations, some very powerful insights. I just realized that, it was not a mere coincidence that we are actually in a place called KUWAIT. So much of AI around us that it was but obvious that we had so much of a discussion on not only about the future of banking but also some practical issues that what we're facing today in the industry. So thank you once again, all the speakers. I also like to thank once again all our sponsors, which includes AQM Economics, BNR Sticharad, ITS, TCS Banks, and Yeti. Before we go out, I want to mention that the chief coordinator for this event, gentleman by the name Marwan, who is actually moving along, he actually is going to stand by the door and he says, I won't let anybody walk out unless they have confirmed to me that they have actually scanned this QR code or filled the form that is given on the print for you to actually give them feedback. As all the Uber drivers say, he would like us to give 5 stars, but it is kidding. So please do share your opinion, feedback, comments, criticism, and any constructive inputs that you would like to share. Once again, if I can have a big round of applause for all the participants and all the panelists for having a wonderful session today. Thank you.